as rosy as the company claims.
Hello and welcome. You're watching Us Profit on NDTV Profit, and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll be taking up all your stock-related queries. So don't forget to WhatsApp us or call us directly. The numbers are there flashing on your screens right now, viewers. And on the show, I'm being joined by Mr. G. Chokalingam on the fundamentals and Sundar Kevat on the technicals. Welcome to the show, gentlemen.
Good evening, Himakshi. It's lovely to be on this show.
Yes, it's our pleasure as well. Now let's get started with the first query on the show, which is written to us by Vishwanathan. He hails from Chennai and he's asking whether it's the right time to invest in Ola Electric for long term. So Mr. Chokalingam, often we get asked about Ola Electric, and since it's, Giga Factory is also there, and even our managing editor Tamanna and Amdar also visited the site. So since then, even, we've seen a bit of a movement also on the stock as well. But fundamentally, Ola Electric, how are you viewing this counter?
We have given a sell call on Ola after the recent rise for various reasons. One, whatever possible growth is there, that for next 1-2 years, which is already in price. That's my strong view. And second, I believe that it's going to be very difficult for standalone EV two-wheeler players to compete with the large existing traditional fuel-based two-wheeler manufacturers. Three of them, companies like TVS Motor, Bajaj, Hero, they already entered EV. They control now almost close to 50% market share, and they make a combined net profit of more than 15,000 crore in a year. It's going to be very difficult for them, for these standalone companies to compete. And coming to specifically to Ola, even if you assume 40 PE for the company, and from a loss of around 450 crore in one quarter, it has to turn around to about 1,000 crore per quarter. Then you can justify the current price, assuming even 35-40 PE. So I find it a little difficult for this company. Of course, in the long term, in case they succeed in emerging as a great successful player, despite the stiff competition from the traditional player, then things may change. But then at current price, I would give sell and wait for another 2-3 quarters to see whether they're able to, come back with the vengeance in terms of competition with the big players.
Thank you so much, Mr. Chokalingam, for that. And also, Sundar, coming on the valuation and the current, values that it's trading at. So, do you see that these are some elevated levels for somebody who wants to take fresh positions on the counter?
Yeah, so Himakshi, first of all, I would like to narrate the stock. Now, if you see on 20th August 2024, the stock has made a high of 157, and then from there itself, the stock was taken down, and the recent lows were made somewhere around 39 to 40 levels. Now, if you see the first half of the 2025, the stock was into a kind of accumulation phase, and the stock has given a strong breakout. And interestingly, the 200 moving average is now acting as a crucial level to watch out. So, Himakshi, it would not be a bad idea to add a stock over here. And if anybody wants to place a stop loss, then the stop loss logically could be placed at around 47 to 45 level where the recent lows are made. So I think so it is a good time to accumulate the stock, but again, the stop loss could be placed at 47 to 45 levels. Thanks.
All right, with a stop loss of 47 to 45, that's what our experts are suggesting. And also on the fundamental front, our experts are saying that 2 or 3 quarters, they're going to watch the stock, and then probably they can give, any sort of comment on the company. Now, let's go across to Dinesh, who's joining us on the phone line from Karnataka. Hi, Dinesh. Good evening. Dinesh, are you there with us on the phone line? I think we've lost the line there, But we have Dinesh Query. He holds 6,000 shares of NMDC Steel at 38 rupee of piece, and he's looking for a long-term outlook on the counter. In fact, he's asking for both technical and fundamental view. And as I can see that he has made some profits of around 27,000. So firstly, coming to you, Mr. Chokalingam, currently it's trading at 42.5. If we talk about today, it was, up in trade today over 1.5%. So how are you viewing the counter in this space particularly? And steel as a space, how positive are you?
I am not that positive on steel industry because the US tariff war against almost all major economies in the world is deflationary in nature for global economy. And oil, after that steel would be the major commodities which will be hit whenever there are signs of deflationary. So therefore, I'm not optimistic on the steel industry as a whole. And secondly, coming to NMDC, yeah, it's a part of PSU. It's a good management, no governance issue. But the problem is, it has been making losses of over 2,500 crore per year. Now, in the situation of this tariff war and global deflationary sign, when highly profit-making companies, very old, depreciated plants are struggling, I think this kind of new companies would have more struggle. So therefore, I would give a sell call on NMDC Steel.
Okay, so that's a sell call on NMDC Steel by our experts. Now let's go across to Shankar, who's joining us on the phone line from Chennai. Hi Shankar, good evening.
Good evening, ma'am.
Yes,
I want to know about Ashok Leyland.
Okay.
Mr. Chokalingam sir, I am watching Ashok Leyland for past 25 years. But I think current market price is not reflecting correctly its business performances and assets. Lot of auto stocks like Maruti, M&M, otherwise all stocks went up to almost 15, 20, 30, 40 times in last 20 years. But Ashok Leyland is actually not reflecting market price. What do you think? Is it any chance to turn multi-bagger stock? It is.
Okay.
I want
we got your query. We got your query, Shankar.
Okay.
So, Mr. Chokalingam, he's eyeing at Ashok Leyland, and he has been observing for the past, quite a long time, 20 years plus. And so why, this stock hasn't been able to deliver the kind of results or the returns that other, peers have given? And is it the right time for somebody who wants to enter the counter? Is it the right time to enter?
It's a very interesting question. I like this question. There are a lot of unique differences between Ashok Leyland and other auto stocks. First of all, this is into commercial vehicle segment. The last 3 decades, the commercial vehicle segment is more cyclical than the two-wheelers, and then followed by even passenger vehicles, because passenger vehicle and two-wheelers are more consumer-driven. The commercial vehicles manufacturing-driven. So the manufacturing growth, all of us know, is not as so robust in the recent times, and it is also cyclical for last 20-30 years quite heavily. Therefore, commercial vehicle segment is cyclical. Second, in the short term also, the GST reform has to do more for the two-wheelers, tractors, and to some extent the passenger vehicles. Not so much benefit for commercial vehicles. So that is the reason it has not rallied in this recent run-up. So there is no doubt Ashok Leyland is a great company, good business model. 30-40 years, it has managed all the cycles and it has emerged a winner. But I doubt whether it can become a multi-bagger in the near future of, say, 2-year or 4-year, 5-year, because other multi-baggers in similar segment like Force Motor, SML, they had a very low equity, low retail float. So for this kind of company, which is highly cyclical, more than the business models of SML or Force Motor, is going to be very difficult to become a multi-bagger in 2 to 4 years. But it's a good company. It's reasonably valued now. Expected GST reform led improvement in the GDP growth should help commercial vehicles. So I would give a hold. Definitely from current level, anywhere around 10-15% return is very much possible.
Okay, thank you so much for that elaborate answer, Mr. Chokalingam there. Now, let's go across to Prasanna, who's joining us on the phone line from Bengaluru. Hi, Prasanna, good evening.
Good evening, ma'am.
Yes, how can I
So
help you
I'm
today?
holding, yes, holding Oil India stocks,
Yeah.
quantity 3,538.
Yeah.
So average price is 435.72 a piece.
Yes.
So I wanted a view from 1 year to 2 year perspective. So I have taken a very concentrated bet on this, considering the macroeconomic situation and also the oil
Yeah.
price,
Yeah.
crude oil price fluctuation.
Yes, yes, yes. So, Mr. Chokalingam, again coming to you, current scenario, the geopolitical scenario amid, US, Russia, and India, eyeing for crude oil, and, a lot of chatter around crude oil is happening over there. And so, in these times, a stock like Oil India, how well do you think that it's positioned from a longer period of time? And also, if we talk about the levels also, if this particular counter, it has dropped down significantly from 435 to 396, and Prasanna is also sitting on a major loss of 1 lakh rupees there. So what sort of suggestion do you have considering all these factors in mind?
Yeah, very interesting stock to discuss. You know, I don't think anybody would lose big money by buying the stock at the current price. It's already corrected and single digit PE, particularly if you take a consolidated earning. But the problem for this company is that, as you rightly discussed about this oil, it's a global commodity, very sensitive to the global developments. Right now, the global crude oil price is down 18% from the 52-week high. But if you would have seen in this morning, the media report, global media report saying that OPEC Plus is planning to increase the oil supply in the month of October. So, as I already mentioned, the tariff war is deflationary in nature. So, when you put both together, there is a possibility of oil price falling quite badly, at least by another 10, 15, 20% also, which is very much possible. That would be negative for Oil India. And also, let us not forget the fact that in the long term, the renewable energy is now taking off and it is penetrating and it is replacing oil to some marginal extent. So, all these three developments are negative. But, however, why I said that one may not lose money at all, it has got the refinery venture, joint venture, and that is tripling the capacity. That is not going to suffer like oil business. So once that is fully commissioned, your consolidated EPS of 40 can even jump to 80, 90. So long term, even if oil let down this company, the refinery business can help. So for a period of 2 to 3 years, definitely one can get a decent return. So I would say hold in case it falls along with oil price quite significantly, then one can buy the stock.
All right, all right. Thank you so much for that, Mr. Chokalingam. And also, Sundar, I'd like to come to you talking about the levels. For somebody who is eyeing oil stocks at this particular time, considering this as a buying on dip opportunity. So do you think that these levels are the correct levels?
Yeah, so Himakshi, if you look at the weekly time frame, I mean, the stock has created lower highs and lower low pattern, which is a classical example of a downtrend. So, I would not recommend the viewer to add it at this level, but yes, I would be more confident to buy it at around 200-day moving average, which is at 268 level. Because if you see, the stock has registered its 50-day moving average, and also currently it is trading below its 20-week moving average. So, it is not a good idea to add the stock at current market price, but yes, at somewhere around 290 to 295 level will be a good bet to add on.
Okay, okay. Thank you so much for that. Now let's go across to Kiran, who is joining us on the phone line from Bengaluru. Hi, Kiran. Good evening.
Very good evening, madam.
Yes, how can I help you today on the show?
Yeah, I purchased MCX at 8,000 100 quantity.
Yeah.
I think what should be my view before Deepavali, whether I should exit and read expert opinion that Mr. Chokalingam or yourself can guide.
Okay, and Mr. Kiran, are you a short-term investor or a long-term investor?
Short time. I'm looking for Deepavali bonus. It should get increase,
Understood.
which I bought at 8,000.
Understood, understood. So, Sundar, I direct this question to you first. He's made some losses of around 40,000 rupees there. So, what's your suggestion for Kiran? And because if I can see that the prices have dropped down from 8,000 levels that he bought to 7,606. So, what's your sense on the counter?
Yeah, so the structure doesn't look that impressive. Like if you see on daily time frame, the stock is getting a lower rise and lower low pattern, and if you compare it with the weekly time frame, the view remains same. So additionally, if you see the 50 and the 20-day moving average has given a kind of crossovers on 7th August itself. So I would recommend the viewer to exit, and if the viewer wants to place the stop loss, then I would ideally logically place the stop loss at around 7,300 level, because if you see the Fibonacci level, 0.5% level is at that level only, and then from there itself you can see on 29th August the stock has hit a kind of doji pattern, and the stock is trying to gain some kind of positive momentum. So logically the stop loss could be placed at 7,300 levels.
Right, right. Okay, thank you so much for that. Now let's go across to Ajay, who's joining us on the phone line from Ambala. Namaste, Ajay.
गुड इवनिंग मैम।
Good
मैं अजय बोल
evening.
रहा हूँ बाला कैंट से।
हाँ जी.
मैम मेरा क्वेश्चन सिलो वर्ल्ड के ऊपर है।
जी.
मैम मैंने सेकेंड वीक ऑफ अगस्त में लिया था 532 पे 4500 शेयर्स
Yeah.
सिलो वर्ल्ड के।
Yeah.
मैम मुझे ये जानना है कि ये तो मैं जीएसटी पॉइंट ऑफ व्यू से लिया था, ठीक है
हाँ,
मैम, कि
हाँ.
क्रेडिट कम होगा, तो मेरा रीजन इसके पीछे यही था। अब मेरे को ये है कि मैम स्मॉल कैप कंपनी है, मैंने ज्यादा इन्वेस्टमेंट कर दिया था। अब मैं सोच रहा था कि इसमें से निकल के कोई लार्ज कैप स्टॉक में जा सकता हूँ क्या, टीसीएस लाइक कुछ, या रिलायंस में,
Okay.
ताकि ये प्रॉफिट बुक करके या तो इसको या होल्ड कर लूँ। आप चार्टिकल मैम टेक्निकल या फंडामेंटली आप दोनों कुछ बता सके तो ज्यादा बेहतर रहेगा।
ओके तो पहली बात तो अजय आपको बहुत कॉन्ग्रेचुलेशंस, क्योंकि आपने बिल्कुल सही टाइम पे सही चीज़ की है। जीएसटी जो अभी रेट कट्स का जो रीजिग हुआ है उसका सबसे ज़्यादा फ़ायदा आई थिंक आपने उठा लिया है ऑलरेडी। जो कंज्यूमर स्पेस में बूस्ट आया है इसको देखते हुए एंड आप ऑलमोस्ट 3.5 लाख रुपए के प्रॉफिट पे हैं, तो कॉन्ग्रेचुलेशंस ऑन दैट। मैं मिस्टर चोकलिंगम सर को ये क्वेश्चन पूछना चाहूँगी। सर अजय को इस टाइम पे क्या करना चाहिए? उसको अपने प्रॉफिट्स बुक कर लेने चाहिए या फिर ही शुड बी स्विचिंग हिज पोजीशंस टू प्रॉब्ली अ टीसीएस और अ रिलायंस?
प्रॉफिट बुक करना चाहिए, दैट्स माय रिसर्च व्यू। 3 साल में प्रॉफिट में कुछ ग्रोथ नहीं है, स्टैग्नेटिंग है, सेम लेवल पे है प्रॉफिट, नेट प्रॉफिट। बट पी रेशियो देखते हो 40 टाइम ट्रेड हो रहा है, वो बहुत कॉस्टली स्टॉक है। प्रॉफिट में ग्रोथ नहीं है, इसके लिए 40 पी बहुत बहुत कॉस्टली है। सो ये टाइम पे लार्ज कैप लार्ज कैप में डाल सकते हैं। स्टॉक्स लाइक कोल इंडिया मेरे को अच्छा, मेरे को लाइकिंग है इन टर्म्स ऑफ फंडामेंटल्स। 7% डिविडेंड यील्ड मिलेगा। ये अगस्त महीने में फर्स्ट टाइम कोल आउटपुट भी अच्छा ग्रोथ आया ईयर ऑन ईयर। सो ये कंपनी मेरे को डाउन साइड रिस्क ज़्यादा नहीं है, बट अपसाइड रिटर्न ज़्यादा मिल सकते हैं 1 साल 2 साल में।
Thank you so much, Chokalingam sir, for that. And Sundar, I'd like to come to you since Chokalingam sir has mentioned, Coal India as the counter. So what should be the levels that one should be eyeing at?
Yeah, so for Coal India, if you see, the stock is currently trading into a kind of sideways trajectory. So if anybody wants to add, then yes, I would agree with Mr. Chokalingam. He could add at current market price itself, because if you see the past two action, the stock has shared a kind of pin bar kind of candlestick pattern, and the 200 moving average is currently acting as an important support level to watch out. So I would recommend the viewer, if he wants to add, he can add on Monday morning itself. And the target for me would be at around 410, the first target. And if the stock price crosses about the 410, then I would not be surprised, Himakshi, to see the stock trading at 430 to 450 levels in coming few months.
That's quite a jump there. Thank you so much, Sundar, for that. Now let's go across to Satish, who's joining us on the phone line from Pondicherry. Hi, Satish. Good evening.
Hello, ma'am.
Yes.
This is Satish.
Yes.
I want to ask about a query on REC Limited.
Yeah.
I hold 1,100 quantity at an average of 386. So I'm in 4 to 5% of loss.
Yeah.
Should I sell it or hold it? I'm not sure. I bought it for the dividends, and
Yeah.
I'm planning to pass it on to the next generation.
Okay.
So is that a good idea?
Okay, so that's a long time that you're planning to hold the counter. So, Mr. Chokalingam, REC is the counter, although he's made some losses currently of around 21,000, but should he stay invested in it for a period that he can actually pass on to his next generation? Is it really that kind of a stock?
Uh, it is definitely a hold for next generation, no doubt about it. But I don't know whether this kind of stock can create a phenomenal wealth for a very long time. It's a very less risky, stable, steady growth company, no doubt. But for passing it on to next generation, apart from the management quality, balance sheet, the valuation comfort, you should also see a thematic trigger or value unlocking potential. Those are the kind of stocks which have created a enormous wealth in the long term. But this also will definitely create a decent return. So right now it is trading at 1.2 times price to book value. Stock also corrected a lot. So definitely, it's a good to buy for long term. There is no doubt about it. So therefore, I would give a buy call on REC.
So that's a buy call on REC. Thank you so much for that. Now we'll go across to Kaushal, who's joining us from Thane on the phone line. Hi, Kaushal. Good evening.
Yes, I wanted to know a short-term and long-term view on Ujjivan Small Finance Bank.
Okay.
Yeah.
And are you
should
holding?
I add more or should I sell it?
Okay. How many shares are you holding, Kaushal?
1,100 at 36.28.
Understood. So is it a recent purchase?
6-7 months ago.
Okay, understood. So, firstly, I'd like to come to you, Mr. Chokalingam. Ujjivan Small Finance Bank. In the small finance banking space, firstly, how optimistic are you if we compare to like a private banking space? The multi-baggers there. So, what's your sense? And should Kaushal be, should he stay put with this investment of his, or should he be switching his positions?
Yeah, very interesting question and a very interesting topic. See, FY26 is a really quite bad year for financial services companies, and particularly for microfinance. And now, if you look at Ujjivan for last 3 years, the profit has been going down consistently. That only one positive aspect is that price to book value is quite decent. It's around 1.3, 1.4 times. But the industry headwinds are heavy. The competition has increased. A lot of finance companies have emerged, not only in the business, even in the stock market. And secondly, a lot of banks also got into lending to the lower end of income segment people. And the overall BFSI credit growth also slowed down a lot. So all this would be negative. So, but somebody wants to hold for 2-3 years, it's okay. But otherwise, I would move on to some stock where I have a lot of confidence of growth and some trigger for making a return. So from that perspective, also adding a safety perspective, something like a Coal India or in small and mid cap, something like a East India Hotel, those kind of stocks I would prefer. But otherwise, it's a good to hold for long term, 2 to 3 years.
Okay. Thank you so much for that. Now let's quickly go across to Nishant, who's joining us on the phone line from Mumbai. Hi, Nishant. Good evening.
Yes, I want to know about IDFC First Bank.
Yeah.
So I'm holding 1,000 shares at 66. Should I switch to Nesco or something? I'm okay with high risk, high returns for the long term.
Okay. So high risk, high returns. Mr. Chokalingam, is Nesco that counter? And firstly, should Nishant be switching his positions from IDFC First Bank to a Nesco at this point?
I would, definitely have that research view, but viewers should note the point that me, my family, company, heavily invested in Nesco, whatever net worth we have. So I want to disclose that. But personally, I believe that Nesco is a next generation stock. It is not participated in the rally in the realty business, and Nesco is tripling its capacity. So therefore, in the next 5 years, it should be able to triple or more than triple the earnings. And then the re-rating should also happen. So therefore, yes, if I am in his position, that is what I would do. I would sell IDFC First Bank and buy Nesco.
Okay. So Nesco is the next generation stock. That's the word coming in by our expert, Mr. Chokalingam. Now let's go across to Mansingh on the phone line, who's joining us from Kurnool. Hi, Mansingh. Good evening.
Hi, Himakshi. Very good evening.
Yes. How can I help you today?
recently I have read in values research 100 bagger stocks. They listed 13 stocks. Out of this, I choose Control Print. Already I have invested. I bought 10 shares around 730 rupees.
Okay.
So should I continue to invest or should I add? What are the fundamentals? And is this stock have the characters to become future multi-bagger in 10 to 15 years?
Okay.
Any other suggestion from Chokalingam sir?
Okay.
Already I am invested in Deepak Nitrite. Anyhow, that company is underperforming. Should I shift that amount to
Understood.
Print?
Mansingh, we've understood your query. I'll quickly go across to Mr. Chokalingam, sir. Mr. Chokalingam, Control Print is the counter. So do you think it turning to be a multi-bagger stock in a longer term?
It's a decent stock. I looked at the fundamental. It can give a decent return, but I don't think it can give a phenomenal multi-bagger opportunity. And also, my suggestion is that, if you are paying for research and getting that kind of view, then you take it seriously. If it is a free tip saying that it will become a phenomenal multi-bagger, then it should be, backed up by own research.
Okay. Thank you so much for that, Mr. Chokalingam. And with that, I'm afraid that we are running short of time. And Sundar, I'm really sorry because there were a lot of fundamental queries on the show today, so we couldn't come to you much. But having said that, thank you so much, Mr. Chokalingam and Sundar, for always being there and patiently solving all our viewers' query. And with that, viewers, it's a wrap on this edition of Ask Profit. But please stay tuned and don't go anywhere.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Tata Motors fully passes on the recent GST rate cut to customers from September 22nd. Price reductions ranged from 75,000 to 1.55 lakh across popular models. Sources tell NDTV Profit Vedanta emerges as the front-runner in Jayaprakash Associates acquisition race, leading with a bid exceeding 17,000 crore. Nifty and Sensex close flat after market seesaw. Most sectors end higher, with Nifty Auto as the top gainer and IT loses the most. Mid and small cap indices outperform the benchmarks. Donald Trump reacts sharply to the India-China-Russia camaraderie at the SCO summit, posting cryptically on Truth Social that the US has lost India and Russia to deepest, darkest China. Meanwhile, the MEA hits out at Peter Navarro's statements on India. Spokesperson Randhir Jaiswal calls them inaccurate and misleading, says both our countries share a comprehensive global strategic partnership. Bank of Baroda classifies Anil Ambani and Reliance Communications loan accounts as fraud. Company says these loans are from before the company was admitted into insolvency and will be resolved either through a resolution plan or liquidation. Mumbai police issue a lookout circular against Shilpa Shetty Kundra and her husband Raj Kundra in a 60 crore rupee fraud case. The couple is accused of defrauding businessmen in a case linked to an investment deal for their now defunct Best Deal TV. Good evening, you're watching Profit 360 and I'm Sanjana. Let's take you on to some breaking news that's coming in this evening. It's a big relief for car buyers as Tata Motors is passing on the full benefit of the recent GST cut, slashing prices by up to 1.55 lakh across its range. Let me quickly go over to my colleague Danish Anand, who's bringing us the details. Danish, take us through all of the details. This is definitely going to be a Diwali dhamaka for those out to buy a car.
Well, that's correct, especially those buyers that are looking forward to buy a Tata car. They are in for Diwali Dhamaka, as the company has become the first Indian automotive company to announce a clear discount or clear reduction in price as far as the new GST rates are concerned. And this particular discount is across SUVs and the hatchbacks that Tata usually sells. And it begins right from its small cars like Tiago or Tigor, and it goes up to its full-size SUVs like Safari or Harrier, and it also includes its compact SUV Nexon, which is a quite popular SUV. But to give you an exact range, the exact range of discount is between rupees 65,000 to rupees 1,45,000. And if we look at the overall reduction in rates in terms of percentage, so if we compare that with the current rate, the overall discount in the entire portfolio is somewhere between 6 to 9%. So this is a big relief to the Tata car, the passenger, whoever wants to buy these cars. It's a big relief for them, and we can expect the other auto companies to start coming out with these announcements starting from tomorrow. But all in all, if we see, it's a major announcement that is coming from Tata Motors. The customers are all set to get a great discount in between 6 to 9%, and the entire if we look at it from another angle, we can say that at least all Tata cars are seeing minimum 50% discount.
Right, Danish.
Minimum 50,000 discount, beg your pardon.
All right, Danish, thank you so much for that update. Tata Motors cutting car prices by up to 1.5 lakh, starting at 75,000 of slash. Festive season really bringing affordable Tata cars across segments. Danish, thanks so much for that. And we'll continue tracking these developments and bring you all of the details. Meanwhile, Balbir Singh Dhillon, head of Audi India, has welcomed the recent GST reforms, stating that he's optimistic about the decision. He has also said that Audi India expects car prices to drop by 5 to 6% following the new GST rate cut. He's mentioned that the company's segment grows with the overall economy and that growing demand will further boost the business.
We are super excited and extremely positive about this decision. You know, the luxury space, one of the highest GST plus cess was there on this industry. This is a very, very positive step. Not only it will improve the pricing for our customers, but also it will widen the base that we can represent now. So going forward, I think once the date comes on the 22nd of September, the prices of our cars will go down by 5 to 6%. And obviously, there is always a price elasticity. The moment you have pricing which is going down, you have more customers buying your car. So we are absolutely positive. Not only that, I mean, this is purely about the transactions of the cars. But at the end of the day, I think our segment glorifies, our segment grows primarily if the economy goes overall. So I think the effect of the GST reduction overall will put more money in the pockets of customers, buyers, and in general, all the demand grows, which definitely will help us grow the business further.
We've been saying earlier that a direct tax cut benefits only 2 to 3% of the population, whereas any change in the indirect tax benefits 140 crore people and has a far-reaching, impact. So I'm happy to see what has happened on the GST side, because this will have a much greater impact, but over time. So I think the problem is market often expects everything to happen the next day. That may not happen. We have a lot of other issues, on the geopolitical side or on the macro side. But if you ask me from the government side and RBI, they've done so much. There's only that much they can do. The rest is up to the corporates and the earnings and all the other factors to play out.
And now let's take a look at how the markets fared today. There was Friday cheer on Dalal Street, with the Nifty managing to shut shop in the green and the Sensex also clawing back after giving up more than 150 points around midday. All sectoral indices barring IT gained this week, with metal leading the way. Auto also fueling a fair amount of gains, ending over 5% in the week. My colleague Harsh now joining in with a wrap of all the market action for the day and for the week.
Well, the Nifty is closed absolutely flat for the day. We've closed 24,700 plus, so we've held that level at least at close, even though we slipped briefly below that as well. So we saw a bit of a recovery from that low of the day. But surely the strength of the morning was given away for a better part of the day, and thereafter we saw a bit of a recovery. Now let's talk also about the breadth on the Nifty, and that was largely tilted in favor of the gainers, and we had around 27 gainers to 23 losers on the Nifty. The gainers largely dominated by the auto sector. 3 out of the top 4 gainers were from the Nifty auto pack, and the fourth one was Shriram Finance, which is also largely a play on auto, and therefore all of those largely, I would say, linked to auto. What didn't do well were some of the IT names, and those dominated the bottom of the screen, along with maybe an ITC, which was the top loser on the Nifty 50. So broadly, that's how it played out. The one big boy, Reliance, did fairly well for itself, 1.2% higher in trade, and that, despite that, in fact, if I can call it, the Nifty closed just about flat. So that was the texture. Let me now talk about sectors as well. The metals outside of auto was the other sector which did relatively well. In terms of the losers, you had quite a few. You had Realty, the Nifty Realty was one of the losers, and you saw some bit of pressure in broader markets where some of those names were concerned. The Nifty Bank and the Nifty PSU Bank. The Nifty PSU Bank closed around 0.25% higher, so some bit of outperformance there. But the Nifty Bank absolutely flat again. The Nifty IT was obviously one of the top losers in trade today. So that's broadly how sectors also played out. Auto, of course, was the top sectoral gainer. Now let me talk a little bit about the week as well. And for the week, the Nifty 50 index didn't do much. The Nifty mid-cap and small-cap indices did much better. So we saw both of those indices relatively outperform the Nifty by quite a bit. In fact, the Nifty small cap index has gained 2% for the week. So it's had a fairly good week, if I can call it that. So the broader markets obviously dominating versus the Nifty 50 for the week gone by.
Right, thanks so much for that, Harsh. Meanwhile, a big corporate deal and the buzz around it. Sources have told NDTV Profit that Vedanta has emerged as the likely top bidder for Jaiprakash Associates with an offer of over 17,000 crore. The bid is expected to fetch lenders a net value of 12,500 crore rupees. Let me go across to my colleague Vishwanath for more details on this. Vishwanath, over to you.
Right. So as you pointed out, the 17,000 crore offer, which will carry a net present value of 12,500 crore. Essentially, this is the value of money that the lenders will likely get, and the lenders here are being led by the National Asset Reconstruction Company Limited. There's other lenders as well. You've got ICICI Bank, IDBI Bank, and Punjab National Bank, all of which have exposures to Jaiprakash Associates. Remember, this 12,500 crore is against total claims of nearly 57,000 crore that lenders are owed by Jaiprakash Associates. Jaiprakash Associates, of course, is part of the JP Group, and the assets that are on sale include power, cement, hospitality, road, as well as some other assets that the group has built over the years. And essentially, this will be quite a steal for the buyer, whoever that is at the end of this process. And of course, it means a lot for the lenders as well, who were not expecting a very high recovery rate in the first place. Remember that the resolution process for Jaiprakash Associates has been going on for a very long time, since 2017 actually, when the account was classified as an NPA. Since then, lenders have been trying to resolve this account, and finally now it's reaching somewhere near its conclusion. Remember, once a lender has identified a bidder as the highest bidder, there still needs to be a process that needs to be followed, and finally it has to be attested by the NCLT and then by the NCLAT before the asset can actually be sold. In this interim, the other bidders, there are 4 other bidders in this case: Adani Group, PNC Infratech, Jindal Group, as well as Dalmia Bharat. These 4 can also come in at the last moment and try to outbid Vedanta. So we need to see how those things pan out in the coming few weeks.
Right, Vishwanath, thanks so much for that update. We'll continue tracking, all of these details and bring you the latest developments. Moving on to what's happening between India and the US and Russia and China as well. Indeed, US President Donald Trump has weighed in on the recent Russia-China-India meeting at the SCO summit and stated that the US has lost India and Russia to what he calls deepest, darkest China. He also added that may these countries have a long and prosperous future together. This comment came after a symbolic photo from the SCO summit in Tianjin last week, where the Prime Minister Vladimir Putin and President Xi Jinping were seen together. His remarks also underscore his perception of the estrangement from both New Delhi and Moscow as Beijing pushes its vision of a new global order through the SCO platform. Meanwhile, US Commerce Secretary Howard Lutnick has also sent a strong message to India and said that the US is always willing to engage in a dialogue, but criticized India's increasing purchases of Russian oil, calling it the wrong move. Now, Lutnick has urged India to support the dollar, and if it chose not to, he hinted at possible trade consequences, including a 50% tariff. Now, the US Commerce Secretary also expects India to join discussions at the negotiating table within the next month or 2. Meanwhile, India has rejected remarks by US trade advisor Peter Navarro, calling them inaccurate and misleading. MEA spokesperson Randhir Jaiswal stressed on the importance of the Indo-US strategic partnership rooted in shared democratic values and close people-to-people ties. Remember, since Donald Trump's return to office, Navarro has repeatedly criticized India's trade and foreign policies and straining bilateral relations.
We have seen the inaccurate and misleading statements made by Mr. Navarro, and obviously we reject them. As far as India यूनाइटेड स्टेट्स रिलेशंस are concerned, प्रणय, ये हम लोगों ने पहले भी कहा है कि दोनों देशों के बीच में एक कॉम्प्रिहेंसिव ग्लोबल स्ट्रेटेजिक पार्टनरशिप है और हम चाहते हैं कि इस पार्टनरशिप को जो मुद्दे तैयार किए गए हमारे बीच में, एक सब्सटेंटिव एजेंडा जिसको बनाया गया है, उस पर काम करके हम इसको आगे ले जाएं, दोनों देशों के बीच में एक आपसी समझ के साथ, दोनों के शेयर्ड इंटरेस्ट के साथ और साथ ही साथ म्यूचुअल रिस्पेक्ट के साथ। आपका मैं ध्यान लाना चाहूँगा, युद्धाभ्यास चल रहा है अलास्का में, साथ ही साथ कुछ दिन पहले 2+2 का इंटरसेशनल मीटिंग हुआ था, एक और डेलीगेशन, एक दल आया था डिफेंस पॉलिसी ग्रुप का अभी कुछ दिन पहले। तो दोनों देशों के बीच में आवाजाही, दोनों देशों के बीच में बातचीत चल रही है और हम प्रतिबद्ध हैं कि इस साझेदारी को और मजबूत करें।
Meanwhile, Indian MSME exporters are exploring ways to circumvent US tariffs with a new survey from the India SME Forum revealing many are facing bulk order cancellations. To retain buyers, 50% of members are considering rerouting shipments through new regions. My colleague Pallavi now joining in with more details.
Right, MSME exporters have been scrambling to look at alternatives post the imposition of the US tariffs, including the penalties. So now they're looking at foreign partnerships, late-stage value additions in other countries, as well as transshipments, among other ways to circumvent these tariffs. Now, according to a survey by the India SME Forum, over half of the member enterprises are looking at using countries in the GCC region, Mercosur, Africa, UK for rerouting their shipments through these countries or value additions before they ship to the US. Almost a fourth of the enterprises are also looking at reviving buyer inquiries from non-US regions, even though that does mean having to compromise on prices, as the premiums that they said they were receiving from markets in the US are difficult to find elsewhere. About 16% of the respondents in the survey also stated that they're looking at outsourcing parts of orders in other countries to retain buyers if the stalemate continues. Now, to be sure, let's remember that Indian MSMEs are going to have to spend more to make any of these solutions work. With some of the exporters we spoke to, pegging the increase in costs to almost 20%, and this is likely to weigh on demand as well from the end consumer and competitiveness. But given what the current tariffs imposed are on India, these might still be financially more viable options than having to pay the higher tariffs. Not just sellers, buyers in the US as well have been facing difficulties in trying to ensure that their supply chains don't break down and in trying to ensure the availability of quality products at the current prices on such short notices.
Thanks for that, Pallavi. And on to the big national story today. The government has just unveiled India's biggest defense upgrade plan since independence. The Defense Ministry has revealed a 15-year, multi-billion-dollar plan to transform India's armed forces. The roadmap, copy of which is with NDTV, includes nuclear-powered warships, next-generation battle tanks, hypersonic missiles, stealth bomber drones, and space-based warfare tech. My colleague Shiv Arur now joins us with more details.
This is a huge 15-year capability roadmap that the Ministry of Defense has unveiled, which basically details what is easily the biggest ever upgrade of weaponry, of military capability since independence. 15 years is a very short time when it comes to a capability roadmap. So this is being seen as a post-Sindoor weaponry capability and vision that has been enunciated by the Modi government in terms terms of what kinds of weapons it wants the Army, Navy and the Air Force to have over the next 15 years. So many of these weapons are already in development and they will be entering service, but this is one of the most ambitious upgrades that has ever been put to paper, and NDTV has a copy of that vision which basically details mountain tanks, and you've got pictures here of Vishnu and me on the Indian Army's new mountain tank that they will be getting very, very soon. The Indian Navy will have nuclear powered warships, a next generation aircraft carrier, long range hypersonic missiles, directed energy weapons, including laser based weapons, long range stealth bomber drones, long range pseudo satellites, all of these swarming drones, artificial intelligence built into our weaponry. All of this makes it easily the most significant defense and military hardware boost since independence. The reason for this, of course, is also that India is a war-fighting nation now. Sindoor came out of nowhere. India continues to be a target of terrorists, cross-border terrorists as well. The world is changing. We've got the Chinese threat, even though India has made some peace overtures on that front, but the reality remains that India is a country that remains under threat. It needs to defend itself. It needs to be able to preempt attacks on it, and that's the reason why this 15-year roadmap details some of the most advanced weapons capabilities since independence. You've got electromagnetic based weapons, you've got rail guns, you've got vertically taking off drones that are capable of keeping eye on battlefields, you've got artificial intelligence fueled stealth bomber drones that are able to take out targets without humans in the loop. These are extremely capable futuristic weapons arsenals that have now been basically articulated as part of a vision document and will be implemented over the next 15 years.
Thanks, Shiv. Meanwhile, in an exclusive chat with NDTV Profit, Maharashtra Transport Minister Pratap Sarnaik spoke about EV bus orders and said people in Mumbai are happy with how the EV buses are performing, and also talked about Electra Green Tech electric bus orders. Let's listen in.
मेरी करीबन एसटी महामंडल के पास 18,000 बसेस जो अवेलेबल है, उसमें से 5,150 बसेस जो है मैंने इलेक्ट्रिक व्हीकल के ऑर्डर दे दी है। उसमें से 480 बसेस जो है वो हमारे पास आ भी गई है, और जो हमारे इलेक्ट्रिक व्हीकल है वो बहुत ही अच्छा परफॉर्म भी दिखा रहे हैं। गांव खेड़े में हमारी इलेक्ट्रिक व्हीकल जाती है तो लोग खुश हो जाते हैं क्योंकि इलेक्ट्रिक व्हीकल में वो प्रवास करें। तो ये तो 2-2.5 साल में पूरे की पूरी 5,150 बसेस आ जाएगी, और उसके साथ साथ हम दूसरे भी व्हीकल ले रहे हैं। उसकी वजह से ट्रांसपोर्ट सिस्टम जो है वो अच्छी तरह से महाराष्ट्र सरकार लोगों को दे पाए।
और आपने कुछ महीने पहले 1-2 प्लेयर्स थे ईवी बस में जो ऑर्डर टाइम पे नहीं दे पा रहे थे, उसमें से एक इलेक्ट्रा ग्रीन टेक थी। क्या वो ऑर्डर्स पे आपने उनसे बात की है? क्योंकि आपका एक उस वक्त स्टेटमेंट भी आया था, अब उसके बारे में करंट अपडेट क्या है उस ऑर्डर के रिलेटेड?
नहीं, उनको इलेक्ट्रिक व्हीकल को लेके बहुत सारी कमियां हमारे देश में जो प्रोडक्शन है उसके लिए है, तो हमने उनकी भी समस्या का निराकरण करने की कोशिश की, क्योंकि जो इलेक्ट्रिक व्हीकल बनते हैं उसको बनाने के लिए टाइम जाता है। उसकी जो बैटरी है वो बैटरी इंडिया में बनती नहीं है, चाइना से या अलग कंट्री से उनको लेके आनी पड़ती है। तो उन्होंने जो हमारे सामने प्रपोजल रखा वो प्रपोजल हमने एक्सेप्ट किया और उनको डेडलाइन दे दी है कि इतने दिनों में उन्होंने गाड़ी अगर नहीं लेके आई तो हम पेनल्टी उनको लगाएंगे। तो अभी तक तो हम वो डिलीवरी जो हिसाब से उन्होंने हमें राइटिंग में दिया था डिलीवरी दे रहे थे, मगर टाइम पे अगर डिलीवरी नहीं देंगे तो उनका ऑर्डर हम कैंसिल करने का उनको राइटिंग में लेटर दे दिया, तो उसके ऊपर हमें गौर करना पड़ेगा।
Meanwhile, trouble is escalating for Shilpa Shetty and her husband Raj Kundra, as the Mumbai police have issued a lookout circular against them in a 60 crore fraud case. The couple is accused of duping businessman Deepak Kothari, who alleges that they secured funds under the guise of expanding their now defunct venture, Best Deal TV, but diverted the money for personal use. The Economic Offences Wing is actively investigating and reviewing travel records and summoning the company's auditor for questioning. My colleague Paras now joining us with the latest updates.
Rightly said, the lookout circular has been issued by the Mumbai Police's EOW on the name of Raj Kundra and Shilpa Shetty. This whole case is of from year 2015 to 2023, when a businessman called Deepak Kotari, now he has registered a FIR against them of fraud of ₹60 crore. So this entire matter, few days ago, enforcement the EOW, Economic Offences Wing of Mumbai Police, registered a case in this entire matter, and after that they are investigating in this matter thoroughly. Now what has happened, a lookout circular notice has been issued to them, and more thing will be done by EOW of Mumbai Police. We have to wait till what things will be done by the EOW. Next, what step will be taken by the EOW in this entire matter.
And before we end, on Onam, Kerala's legendary backwaters come alive with the exhilarating Vallamkalli snake boat races that are now beating the heart of the celebrations. Let's quickly take you across to this and a final look at the energy of the race, and wishing you all a joyful Onam.
Are you ready?
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live Ask, decide, and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio.
Who better to talk about the implications of the GST reform than the individual who's joining us in studio right now, Navneet Munot, Managing Director and Chief Executive Officer of HDFC AMC. Navneet, thank you so much for coming by. Pleasure having you in the studio.
Entirely my pleasure to be with all of you.
So your initial thoughts, were you surprised, positively pleased by the pace at which this has taken place, that mammoth meeting that took place? I think all of us were caught by surprise. We were planning for a Friday.
So I think you have to give it to the government, not only for the policy prudence over the last several years, but also for the agile execution and effective communication. I think these two get added to the policy prudence, and we see in the context of rest of the world, we really feel proud to be an Indian today. I mean, look at the way the largest country in the world, the largest economy in the world, has been communicating to the rest of the world versus what the steps that we have been taking. And on one side, you are seeing increasing tariffs and putting more burden on the consumers, while saying that our tariff revenues have gone up to the treasury. On other side, what India is doing is, I want to give more benefit to the larger section of the society. This is what the Bahujan Hitai, Bahujan Sukhai philosophy versus doing the tax cuts for maybe a few rich people in US while taking more tariffs in the form of tariffs from larger set of consumers. I think there is a contrast in terms of the way we are pursuing our policies. And you can see that on 7th of April, correct me if I'm wrong, Nifty touched a low of 22,000 or somewhere there. And despite 25% tariff, then another penal 25% tariff, and some of the other news flow, we have made a double-digit gain since then. That day, nobody would have predicted that in next couple of months, Indian markets would actually be higher than lower. So I think, yeah, I'm sure we are taking right steps.
I wonder, Navneet, if the person of the year this year would be GST or would it be tariff or somebody else?
No, I think all kinds of, the benefits, the way they have flown to each and every person in the society. So you have a rate cut by Reserve Bank of India, liquidity injection by Reserve Bank of India, creating a more conducive environment for higher credit growth. You had the personal income tax benefit, and now it has been followed by the GST rate cut. And it is not only about cutting rates and taking less taxes. It's also about, like Chanakya said, that the government should take taxes the way butterfly takes the nectar, something like that. Yeah. And I think this is what the simplification aspect should not be neglected. Yeah. Taking advantage of digitalization, trusting your people, trusting your citizens, to have faith that over a period of time, we'll consume more and we'll pay more taxes, or we will earn more and we'll pay more taxes, and that will create a virtuous cycle for the economy.
Yeah. But guys, I was thinking about this, right? Since January, the RBI took the mantle and reform after reform or measure after measure, and now we've had the government come in full drive. It's been 9 months of some serious action on the India side.
No, then my question is, then why are the markets not responding in that fashion? Is there an underlying pain or concern that we're not seeing right now?
Last 5 years, I mean, look at the returns our funds have delivered.
I
think you
can
cannot
stretch
have
back
that
to,
month after month, right? I mean, then imagine, I mean, if every month market delivers those kind of returns where the markets would be in few years' time.
Most
I think
of
it's also about
has
because...
been tough. Most of 2025 has been tough.
See, we had 3 years of 20% plus earnings growth. I think this is a year of consolidation. We saw some moderation in economic growth as well as a corporate profit growth. Now I think while working on capital expenditure, that we revived the investment cycle, government did the heavy lifting, hoping that private sector would take up. Also now creating a demand pull, which gives more confidence to the corporates if you see a higher consumption, higher investment, because you know that global environment is not conducive for exports. But even then, even there, I think all these measures can also lead to India taking share on the export side. I think semiconductors is a classic case, what Prime Minister talked about, that these are the digital diamonds, right? I mean, so you are thinking of like
at
creating
a time when the price of real diamonds is dropping. It's time to go digital. My question for you, sir, is that as people have more money in their pockets, what will they do with it? Now that money has come in from tax cuts, from GST savings as well, are you hoping that they make the decision to invest more, to buy more insurance, to buy more mutual funds? Is that something you're actually pegging in?
Of course. I think the panacea for India is higher growth with macroeconomic stability. And this is what the government has done over the last decade or so, without compromising on macroeconomic stability, without compromising on political, social and financial stability, give a push to the growth. And a highly balanced approach. That's why I use the word policy prudence, agile execution with effective communication, not only to domestic stakeholders, but to the global stakeholders. And this is the game we have been playing for the long haul. I think what we need to do is take the absorption capacity of the economy to a higher level, that once you have more savings flowing into the market, as of now we are seeing a bigger flow of domestic savings. At some stage we are going to see higher flows from the global investors also. How do we create a bigger absorption capacity where the potential growth rate of the economy itself can go up? And at $2,500 per capita, 1.4 billion people, this is where 18% of humanity is. This is where the youngest population in the world is. Will be the biggest supplier of new consumers to the world, will be the biggest supplier of labor force to the world for next several decades. So you have to ensure that you take full advantage of that demographic dividend. And what you talked about that last 9 months, the reforms that have been taken will keep us in good stead for next 9 years.
Wow. You know, on that note, and the flows that have been coming through to the domestic mutual fund industry have been absolutely fantastic, right? And if I look at the top schemes in terms of assets under management, I think at least 2 of yours in the top 5, top 7, right? I'm just wondering whether the way that companies are raising funds for capacity addition for plans in the future, it's shifted, right? They're not necessarily going towards debt. They're able to raise equity, and there is so much appetite that is being directed through you. Do you think that that will only gather pace with the kind of funds that are available? Because, for example, 1,000 crore IPO comes through, your scheme has 80,000 plus crore. It doesn't require a lot for you to deploy.
No need.
No, sure.
Day before yesterday, Ramdev Agarwal said that the monthly flows could hit 1,50,000 to 2 lakh crores. Are you of that camp too? So it's the 2 questions rolled into one.
So I think when the monthly flows were 4,000 crores, had I told you that there will be 7x in next 7 years, you wouldn't have believed it. So I think we have to look at it in the context of the GDP that we have, the savings that we have. India has been a nation of savers for generations. What we are doing now is becoming a nation of investors. And I think this is very good for the economy. In a way, we can say that with pride that we have become Atmanirbhar when it comes to capital market. Now, I won't say that we don't need foreign savings. I think our investment needs are humongous. Humongous. We need more foreign flows for sure, and at some stage it's likely to come both in the form of FDI as well as in the form of FPI. Now, I'll give you one data point. If I look at United States, there would be $50 trillion of institutional money which can potentially look at India as an asset class.
Okay.
Think about 1% switch. What amount that is? $500 billion. Now, to put that number in context, we have hardly got any money in last 5 years. But the potential for us to convert 1% of their investment assets today is 500 billion. That's $500 billion. That's why I've been harping on the point that what we need to do as an economy is to increase the absorption capacity of the capital. You meet the corporates. Just now I saw you were talking to someone. So two things are important for corporates and for us. Like one is the growth and second is the return on equity. Growth, of course, has slowed down a bit, but we are all hoping that it will pick up and government is doing whatever it can. On the return of equity, you have three sources. You have the sales margin, into the asset turnover, into financial leverage. Now, because of the bad experience of 2008 to 2014-15, everybody has been on a deleveraging spree. It will take some time for them to leverage. They have been focused on margins. I think not so much on the asset turn. We need a little bit of more growth momentum, and then what it will create is maybe a risk appetite where they take more leverage. Equity is easily available today. They will take leverage, and of course, they will put up new capacity. We need to focus on everything rather than just on like a macro stability, because growth is very, very critical in the long run.
So in a sense, I want to make sure that you've answered my question, because you kind of did.
I'm sorry for
be clear. I want to be clear that is what you're saying. You're saying that right now they're not necessarily raising a lot of debt, but you're saying it's necessary.
At some stage, as of now, because the equity flows are good and companies are able to raise capital, and also you are seeing like new business models coming to the market. Some of these companies wouldn't have thought of hitting the public markets at that stage of growth, but markets have kind of like
been conducive.
Has been a conducive environment, which is very good, because this will kind of fuel more entrepreneurial energy in India.
This whole thought, Navneet, that 5 years ago, agar promoter bech raha hai, it was taboo. Now we see, for example, in HDFC Mutual Fund, subscribe to 80% of the total sale that the promoter is making, and the stocks don't flinch. What is this?
I think two ways to look at it.
How do you also agree to do that?
No, also you have to look at it that in India, the promoter ownership is very high, right? You don't have many countries where you see like half the market owned by promoter. That promoter could be Government of India, it could be a multinational company, it could be a family, it could be a private equity and VC guys. Particularly the private equity and VC over a period of time are going to reduce their holdings. And there could be a few promoters who are looking at maybe a new lines of business. Maybe there is a family succession, want to get a more professional CEO in place. Many reasons for that. And market environment has been conducive. At the same time, I think market is discriminatory. I don't think that every IPO or every equity sale is meeting with the same reception. And I think it's better that we have more discrimination than chasing any kind of paper. But more interestingly, if you see the behavior of the foreign investors, you see a greater participation in primary market, whether it's the blocks or IPOs, than the secondary market.
We saw that yesterday as well.
So almost every IPO, you look at the list, who are the investors, the same set of investors.
That's an important observation, because then it belies the claim that foreign investors are not hot on India because there is a basic problem. Clearly they are.
You look at the primary issuances.
Yeah, they're just picking their battles. As someone who is so bullish, like, you have been through this interview and since a very, very long time.
Bullish doesn't mean, I've also been highlighting for over a year that valuations have been running a little ahead of fundamentals. One need to be cautious.
Even
now I would say relatively, because of the time correction we have seen, markets have been lower than where they were a year back. And of course, I think a little bit of earnings growth, and now expectations that earnings growth is likely to catch up.
So let me come to my core question. Where does an astute investor who is betting on, not looking at daily trade, etc., look at if they are as are buying in to the India story, then what should they look at? Should they look at new economy? Should they look at the tried and tested large cap banks? Should they be a little more greedy, a little more risky? What would you advise?
So astute and daily trading is an oxymoron, right?
No, which
when you said astute, not that. So if you are an astute, then you won't do trading.
Exactly.
I think if you are an astute, you would take a long-term view on India. That I think with the demographics that we have got, I think the policy reforms that have been put in place, the infrastructure that we are building, whether it's physical, social, and digital infrastructure, and I think over a period of time, it's going to be a multi-pronged growth model than a very narrow set of growth models most of the other countries have seen. The only market that comes to your mind closer to India is like United States, where you have variety of businesses focused on growth and capital efficiency. I think India can do that. The only difference is the risk appetite there is much greater than what we are seeing in India, despite the fact that equity and market environment has been so conducive to raise risk capital.
Sridhar Shivram, Investment Director at Enam Holdings, joins us right now on the show. And Sridhar, good morning and thank you so much for joining in.
Thanks for inviting me.
No, the pleasure is always ours. You bring out points which a lot of mere mortals like me fail to look at first glance, and I'll come to those detailed points too. But just the broad 50,000 feet view, are you happy and enthused by the moves that have been taken? A lot of it was on predicted lines, but there was some better than expected delivery from the government as well.
So if you ask me, I'm happy with the moves that the government has taken now. We've been saying earlier that a direct tax cut benefits only 2 to 3% of the population, whereas any change in the indirect tax benefits 140 crore people and has a far-reaching impact. So I'm happy to see what has happened on the GST side, because this will have a much greater impact, but over time. So I think the problem is market often expects everything to happen the next day. That may not happen. We have a lot of other issues, on the geopolitical side or on the macro side. But if you ask me from the government side and RBI, they've done so much. There's only that much they can do. The rest is up to the corporates and the earnings and all the other factors to play out. But that's how markets are. They're never linear, right? You have phases. So I have no complaints. I think they've done everything, and markets will play out over a period of time.
Most certainly. Is this meant to be, Sridhar? I mean, yesterday I was talking to Madhu and Ramdev, and they were saying that the view was that, or one of my interpretation of the view was that it's almost a measure that is even bigger than the budget announcements that are made at times, this simplification. And it has, as you said, a longer term implication, and people should look at it that fashion, that it is a move of such a magnitude that the benefits will play out over a 12, 18, 24 month period, and think of them that way, and they will be very large in nature. Would you second that?
Yeah, so I think when I look at the details, it sort of gives me a feel that the benefits are more to middle and lower middle class, and that's how it should be.
Right.
There are some, taxation which has gone up, some sin tax, and I have no complaints on that. It will neither have an impact to a large extent on the consumption either way, but the simplification and the reduction of taxes at the daily use items, those will have a longer lasting impact, and I think over a time it will play out. And the other thing is simplification, that you don't have so many tax slabs now, so it is a much easier and much simpler way. And I think I'll have to give full credit to the government for every reform measure that they have taken over the last, say, 3-4 years. And finally this, I mean, this is something that we've been saying, that indirect tax benefits more than a direct tax benefit. I'm not saying direct tax is not welcome. It is welcome, but
this is better.
I would prefer an indirect tax, and that's how it's played out.
Now, you've been a dove on inflation, and
Yes.
I presume that you believe that this plus a set of recent moves are further deflationary or anti-inflationary.
Yeah, exactly. So I think not a lot is documented that a cut in GST also helps the CPI inflation. A rough calculation suggests that it should have an impact of about 50 basis points on a durable basis, because this is a cut in tax and the prices go down.
Right.
Will the entire 50 basis points stay? We are assuming at least 25 stays, because some price increases over a period do happen. But even a 25 basis points on a durable basis reduction is significant. So we were already on the dovish side as far as inflation is concerned. So our number for Q3 is around 2%, RBI is at 3.1. So we are almost now 100 basis points away from where RBI is. And I'm reasonably sure, which happened in Q2 also, that RBI came down closer to the number that at least we were suggesting. The same will happen for Q3 also. But the question is there more room for rate cuts? We think another 25 basis points, sure. and if Fed is supportive, that if Fed cuts some more, then we have more rooms. I think the joker in the pack here is how rupee is behaving. And so if RBI has to manage multiple legs, they'll have a close eye on how rupee is. And that may also determine whether they want to cut or not. But in our view, when we look at all of it put together, we think another 25 basis points, they'll have room.
The Fed seems to be given after yesterday's data. I mean, the overnight data in the US isn't exactly great for the labor force numbers,
yeah,
right?
so we don't know how Fed is reacting. There are a lot of political issues happening there. We think that so there are some headwinds on inflation in the US also. So we don't know how that plays out. But when we look at, I'm not an expert on US, but most people I speak to think that another 25 to 50 basis points of cut in the US is possible.
Got it. Okay. So how does the investment landscape change between before September 3rd and after September 3rd, if this has the potency to make investment rationale change, the GST 2.0?
See, we don't make such drastic changes because of a policy that has come just now. We'll want to wait and see how this plays out. Surely this has a boost on consumption. The expected number is say around a lakh crore over a period of time, and we'll have to see how this plays out and what happens, which sector. It is. I'm not in the camp that if there is a reduction in GST in say in auto, it will benefit auto. I'm not going to buy more cars, but it may benefit in some other segment. Because if I have saved some money, I was anyway supposed to buy a two-wheeler or a four-wheeler. I'm not going to buy another one, but I saved some money, so I may be using that for something else.
Okay.
So it's a second derivative impact which I have to look at. And it's possible that I may be repaying a loan. So that's what I said, that it's not a direct impact. I'm not going to change my consumption view because something has happened, but I do have surplus in my hand. And how does that play? That is more critical.
But you don't believe that for some people who may have thought that prior to the GST cuts, this thing was just slightly out of reach. Maybe now it's within reach. I can muscle up money from somewhere else which I was supposed to spend and instead buy a two-wheeler or a car. That may not happen.
May not be for the car, maybe for a two-wheeler.
Two-wheeler.
Yeah.
Maybe not for a car. Okay.
So to that extent, yeah. And some people argue that if you're buying, for somebody who's at that level and he's using a loan, then the loan EMI isn't that different.
That's true.
But as I said, there is a saving, and the question is, how does that saving play out? Is it discretionary consumption? Is it some over leverage that gets paid out, so the leverage comes down, which is great? So time will tell. But as I said, on a broader scale, I think it's very positive. We needed a push for consumption, and that has come. We'll see how it plays out.
But I wonder, sorry, just one last point on that. I want to probe this a little bit more. I remember budget 2025, the income tax cuts, and the post-budget meeting that happens at the Motilal Oswal office. Everybody was talking about how will the 12,000 rupees be spent, right? Consumption, maybe savings, maybe investments, maybe consumption, but consumption. Then this, plus the interest rate cuts. You're not very gung-ho on consumption somehow, or is it my imagination?
No, I'm not very gung-ho on consumption because a lot of other macro factors are also playing out. So keep in mind that, this has to come from somewhere. Government is not imagining, okay?
That's
true. So where is this coming from? And our understanding is that this comes from a reduction in capex spending, not only from the center, also from the state.
Right.
Now, a reduction in capex has a longer lasting impact. So it isn't like, I would have been happier if we did a PSU divestment, some privatization, massive, and we got a bonanza. And from that bonanza, we gave out, this tax cut. That's not the case. So sum of part is zero here. So
Yes,
you're
of course.
reallocating money from one to the other.
But hence my question, Sridhar, that therefore capex may suffer but consumption may not.
So capex suffering has its second derivative impact, right? So the contractor is not getting more business, and then his labor is unemployed. So which is why I said, if you ask me, the sum of part is zero right now. I would have been happier if they had done, asset sale and use that asset sale proceeds to give a bonanza. That would have been it would have had a larger impact. I'm not saying this will not have an impact. I'm saying that this will play out. As you would have seen, I had said earlier, even on the budget speech, that I'm not very enthused with the impact that a direct tax cut will have, because you and me also got benefits. Does it make a difference to either of us? No. I mean, did we consume more just because I got some 5,000-10,000 extra? No. Maybe the person who was earning 25,000, he benefited. But in the overall scheme of things, it didn't add up much, because we already seen, say, 6 months of data. So that's my point, that this will add up, but over a period of time. And I would want to see which sectors will benefit. Maybe at the lower end, the discretionary spending is what I would want to, if I have to take a guess, I would say discretionary spending would benefit.
Okay, now the other aspect of talking to Sridhar Shivaram is that he's a hawk on data. He looks at data in multiple ways and then tries and tries. So I'm now trying to urge you to not hypothesize and tell us, based on the data that you've seen, or based on your assessment of how geopolitics has moved, maybe the thawing of India-China relationships and what that could do to availability of rare earths, etc., etc. Is there something that you would want to, that you are pointing towards or leaning towards in terms of the outlook ahead for themes, for investable ideas, what have you?
So I think what is happening is that our macro on the forex side has deteriorated.
Okay.
Which is what we are seeing on the rupee. And the current account deficit, our net FDI has been literally zero for a while, because even though we get FDI, we get outflows from corporate selling and the private equity selling. We saw a large block happen even yesterday. So this has an impact on the forex reserves, and my guess is the forex reserves, as we get more and more data, this will come down, plus we'll have a hit on the exports. So this has certain impacts on the liquidity in the system. So I would guess that Reserve Bank in the past, in the last 3-4 months, has been very dovish till they became neutral in the last policy. They may sound a bit more hawkish, trying to balance inflation and currency.
Okay.
That may have some impact on the, the markets, which is in the short term, even though we've had, so if people ask, so much of good news has come, why has the market not reacted? This is possibly the reason, that there is a possibility that, you can't ignore currency. When you have a current account deficit, you know that your exports are going to get hit. Whichever way we see it, our exports are going to get hit. Plus, we have an issue on the net FDI.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires.
Welcome to this episode of Building Legacy. Today we're going to be talking about the structures that need to be inculcated within family businesses to keep them going. Family businesses, of course, are the backbone of our economies. They shape industry, create livelihoods, and pass down more than just generational wealth. In this series, we delve into the heart of family-run enterprises where personal relationships and professional ambitions often collide. In this episode, we deep dive into how a family-run enterprise can adapt for the future with clear roles, advisory boards, and family constitutions. Joining me, as always, is Boston Consulting Group's Janmajay Sinha. But we also have a very special guest to take us through today's episode, which is Ajay Sriram, a respected business leader who has successfully navigated the complexities of a legacy business through the decades. Welcome to both of you, and thank you so much for joining us on this episode of Building Legacy. Mr. Sinha, I think this episode is a crucial one because it comes to the heart of how to and what to do to successfully run a family business.
It's absolutely true, Tamanna, and it's a great pleasure to have Ajay with us, who is actually a doyen in this area, and I've learned a lot from him. So, if you really look at it, all companies come under the rubric of SEBI, the Competition Commission, the High Court. Who does the family come under the rubric of? The parents.
The patriarch.
Yeah, the patriarch, the parents. But there are no rules. They can do it whichever way they want to. And so, when you have a large business, then what do you do to manage the family in a way that is constructive? Now, we are talking to Ajay, who comes from one of the most iconic families that India had. At independence, almost everything that you heard of, other than the business also, forget about Sri Ram, but Lady Sri Ram College of Commerce, the whole vast areas that their family actually created. And then, for the last 35 years, he has been, in a sense, stewarding his side of the family as they have gone in and expanded. And now I'm sure he is thinking about the next generation and how they come into the business. So it's the ideal person actually to talk about, structures and how they think about these formal and informal structures. It doesn't have to be everything being written as a constitution, because unlike a nation, a family's constitution lasts only 10 years, 8 years, and then it has to evolve. And so it's a good time to get Ajay, and Ajay, give us a perspective of Kal Aaj aur Kal for the Sri Ram family.
Thank you very much for inviting me on this program. It's really a pleasure to be here. Our group, the Sri Ram Group, started 136 years ago by my great-grandfather, Sir Sri Ram. And as rightly mentioned, he was an institution builder. He was a nation builder. I think that was his objective at that time. We continued together as a joint family business till 1990. Then in 1988 or so, the family started feeling, let's restructure the group, because the number of male family members working in the companies was growing more and more. How do we give more independence, more space, and more actually ability of each one to pursue what they want to do. How do we move forward? So if I may say so myself, in 1990, we had a very amicable, cordial settlement between the entire Shriram family at that time. We split into 4 different companies. The allocation of businesses, because DCM Limited, erstwhile DCM Limited, had 7-8 different business activities and different SBUs, as we used to call it. So it was a negotiated discussion between family members of what will go into which group. Accordingly, in May 1990, 4 different companies were formed, and our company, my younger brother Vikram and I, got into the hot seat in 1990 of that time called DCM Shriram Consolidated Limited, which we later on changed to DCM Limited. I think that was a very big change for us, because prior to that, we were working in one of the SBUs in the erstwhile DCM Limited, reporting to an executive director. And suddenly we became managing directors. We were blessed in a way, and we were very happy that the board of directors we had were really wonderful. We actually took an approach that let's get an outside chairman who can give us the right values, the right culture, and whom we know. So we requested Mr. Mantosh Sondi, who was a director on erstwhile DCM Limited, to be our chairman. He was chairman for about 12 years. He set down a lot of systems, procedures, what should be the conduct on the board, how to bring about transparency, how to move in a structured manner, that what's best for the company. We always said so ourselves, that ultimately, end of the day, we are the largest shareholders. If the company does well, we are the biggest gainers. But we have a lot of responsibility.
But Ajay, I'm going to stop you for a second and ask you that the board of directors all companies have. Right. But what did you and Vikram do as the brothers to manage yourselves, as the family? And then how did you all start managing your kids? Because the board, of course, was there, and you all strengthened it, and you had a person as eminent as Mantosh Sondi on it, which was fantastic. But what did you all do that you all didn't allow any tensions to grow between you and your brother?
So I think there are 2 sides of it. One is management of the family. The other is management of the company.
Yeah.
I think one has to focus on both. Incidentally, about 95, 96, when we had at that time also different SBUs within the company, we are a firm believer that people are the core strength of any company. So we started working on teamwork building programs, and with a behavioral scientist. By then, my third brother, Ajit, also joined us. We actually started going out with the behavioral scientists to communicate. So I think 3 things which are very critical for family togetherness in a company. One is communication. There's no getting away. Communicate, communicate, communicate. That's the most important. Second is transparency. How to actually ensure that there is total data presentation of everything between the family. And the third, I would say, is intention. I told my brothers, I said, we are all human beings. I will say something you don't like. You will say something I don't like. But if the intention is not wrong, it's perfectly all right. Let's talk and sort it out. So we moved with the behavioral scientist, and we've had actually till date over 20 or 22 or 23 3-day, 4-day retreats just to talk, communicate, and just get things off our chest so we can talk to each other. So I think the family management on one side is very, very crucial. Secondly, on the company side, we actually told that time Mantoshi, we had a gentleman from Bombay who was the chairman of our audit committee. We told them, please be as strict and as rigid as possible. Please look at the details. Please ask questions. Please don't hesitate.
So Ajay, I want to stop you again and ask you a question.
Yeah.
When you asked Mantosh Sondi, please be strict, please ask, it was also because you all were quite young at that stage when you suddenly became managing director, and there was some degree of anxiety in that role, you know. So you were not unhappy about having a mentor, elder statesman, you know, to start to guide you. At what point did it start becoming irritating to have a person like that?
No, I'll be honest with you, we never felt that, Janmay. We really never felt that, because in the audit committee meetings or any other board meetings, we actually suggested to our CFO, etc., ki, please answer question. We encourage our directors, you want to have a separate meeting with the CFO to understand the company better, please do that. And even now it's happened. So the communication level is high.
But one thing I will ask you, at the start when you became managing, you were executive director, then you become managing director. How did you create your team? There would have been people who would have been unhappy. How did you change them or bring, you know, bring in a mix that could allow for your team to get created?
You know, the first thing we did after the restructuring, Janmay, was getting to know our people. So, you know, we used to go to Kota at least twice a month and spend at least one day just talking to the senior officers and understanding what their views are and what our views are. That's how we get to know each other. And as I mentioned, we do actually team building exercises with external resources. We went to Agra in 93 or 94 for 4 days with our senior most team to again just share and talk and get to know each other better. So I think outside resources play a very major role, provided you have an open mind. I think that's important.
I just want to delve into this point. The extent of self-awareness also required to say that let's bring in a behavioral scientist, let's bring in a structure where you have a statesman or a mentor to guide you through, and then come with an amicable family settlement at the end of it. And you know, Mr. Sriram, give us some color into what was going on at that time which led to this self-awareness.
Tamanna, can I interrupt you here? Can I say, you know, there is a difference in my view from an outside-in perspective. We'll get Ajay's view, of course. The patriarch or the Superman entrepreneur who creates the business, you know, they are a different breed altogether. The generations that follow have a very different sets of challenges. The first patriarch, the Superman entrepreneur, who does something when everyone was telling him he will fail, what are you doing, this risk, that risk. They have to really believe themselves. And they have to have this, I'm going to do this. And at that stage, you know, they are not the most open to, you know, being like an Ajay, bringing outside people in, etc. The Superman entrepreneurs originally, you know, they drive. Then the next generations have to know that they are not Superman entrepreneurs.
Exactly.
And that is what he knew, but the others don't always. You know, let's get his perspective.
So which is the point, that self-awareness that, you know, let's bring in expert help. And just because I'm in this family, in the hot seat, doesn't mean that I immediately take on.
You know, that's one point we've actually shared among ourselves as family, and more so to the next gen. Never feel that because you're a family member, you know it all. I think if that sort of a mindset comes in saying I have a right because I'm a member of the family or a large shareholder, I think that is where it can be very dicey for the company's future. So our approach is, let's get the best resources from wherever we can. Actually speaking, if you look at it this way, I think our job as managing directors is to get the best person for the right job at the right time. That is what we have to focus on. And right from day one of...
One question, that, you know, you do a retreat once a year or, you know, whatever. But on a day-to-day basis, how do you all communicate? How do you show? What is the structure that the family has to manage itself? Or not just the yearly things that you have, etc. But is there an advisory group? Is there a pre-board meeting discussion? How do you all align?
You know, to be honest with you, Janmay, in the last 5-6 years, we have set up a family council.
Okay.
And it's a business family council. where we discuss business issues also on a periodic basis with a fixed agenda, with a structured system. I think what we have believed in from day one is whether it's a family company or a non-family company, some processes and systems are absolutely essential. Unless there is some discipline on how we are going about managing the enterprise, we can't have whims and fancies. There must be a counter check.
So what is the membership of this family council?
This family council we have today has got 2 people from outside.
Okay.
And three of us from the family. And now my elder son, he's also become a deputy managing director a couple of years back. So he's also part of this. And we interact periodically to talk about how is the family going, how is the company going, do we need to bring out changes? And we've also got consultants from outside.
So decisions are majority or consensus?
Consensus. We in fact have told our EDs also and others, look, it may take, sometimes it may take a little longer, but we want to move by consensus. And if there's something which is grossly unfair, this is where outsiders come in. That they can bring in a different perspective, a new perspective compared to what we are. By being in the company for 30 years, you think in a particular way. But how do you get an outside-in perspective? That's very cool.
I have a question here, because what is the key to success? When you spoke about the Superman entrepreneur, at the end of the day, there is this feeling that to run a successful business, you can't have a democracy kind of situation. And just borrowing from the word consensus, because that's how you'd want to run a country, but not necessarily a business. There's someone at the end of the day who has a right of veto, who takes a call, says yes or no, and then the burden of those decisions sits with them. Is that a sustainable way to move forward?
So let's ask him.
Yeah.
So in our case, frankly, because we've got 5 or 6 SBUs within DCM Shriram Limited, it's very clear which family member is responsible for which one. Ultimately, at the end of the day, the ED concerned has to report to someone. If there's an issue which comes out in a business, he can't look for 3 or 4 managing directors to, ask a question. So that's one. Similarly, corporate office functions also are reporting to someone. We have clarity on that. Then we have what we call a group management board, which meets every month. And there we review the performance of the business, and that has all the business heads on it. So that discipline comes in.
The kind of structures that Mr. Shriram is talking about, now we should sort of give a sense to our audience perhaps on how they can implement some of these ideas, because it's coming from a place of clarity, of thought, and ensuring and preempting any conflict. At what point do you start planning like this? When you see the first signs of trouble, or should this be something you put into place as your family and your business is expanding?
So let's ask him what he did, and then I'll give you what I've explored in different families.
Well, to my mind, frankly, the sooner one starts, the better. It's much better to do it and just start talking, sharing, communicating, each one voicing their own concerns, their happiness, their tensions, etc. So we know. Second, what we discuss very often is what is the intention of the family? I mean, family is making money or getting a financial return is one side, but it's much more than that. I think we are also proud of the legacy set up by Sir Shriram. We are trying to follow that of how we are building the right culture, how do we build the right social activities, how do we actually ensure that we are good corporate citizens who are contributing to the growth of the nation in whatever way we can. So all these issues come in, but sooner we start an open communication system, the better it is. And please don't wait till there's trouble. It's much better to do it before.
Which is my point, because a lot of people start, they have this idea of a utopian family and think it will all come around.
So shall I tell you what I've witnessed in the different families? There is a huge difference with the amount of years a family has been in business. When there is a patriarch, many of these structures don't exist. And the view from the top to the bottom is very different. The patriarch believes all they are his children, they'll all get along and you can do things. When the siblings come in, it's very important that they actually think about it. Otherwise, the first set of conflicts happen. Siblings, brothers fight. So to prevent brothers from fighting, because the switch from a patriarch to the first generation of siblings is very important, that they are smart. If they are not, they will fight. So, you can see that a lot of family businesses have disruptive fights. It is not that Ajay and his brother don't disagree, but they don't have disruptive fights because they have put in some principles. Those who have disruptive fights have not put in those principles. So it's very, when the patriarch is there, many of these things are not there, and no one can challenge the patriarch really. They are also stewards in some sense, but they are 24/7 people, building the business. And, the business is quite often their true love.
The point is that should the patriarch already put in these structures?
So the interesting question is, it depends on the personality of the patriarch. Some patriarchs are very thoughtful. They go into this in great detail. Others, want their children to make their own mistake and learn. And still others are too consumed in creating the business to have some much time to think about this. And there are three different buckets. Those who are just building and are running so hard that they don't have time to think, and they believe their children would have picked it up. I mean, they've been part of it. Then there are others who over-engineer it. Everything that they are so worried about.
They're micromanaging.
Yeah. And then there are those who say, these are some thoughts I have. Develop it. Do it. Do it the way you want. And they allow their children a lot of space, in that sense. So it's one of those things which is quite different. And I have seen this, any family which has been there for 60 years, 70 years, and all one rubbish we keep hearing, families can't go beyond 3 generations or from shirt sleeves to shirt sleeves. Compared to what? The other companies barely live 15 years, 20 years. So these businesses are living a lot longer.
So, just to recap as we wrap up this episode, because I think we should have a clear takeaway here for people who are watching, and many of them would be people running family businesses or expanding their family businesses. When we talk about some of the structures that should be put into place, and Mr. Sriram, I'll ask you to sort of give a sense of this, drawing from your own experience. Start earlier the better, and what are some of the tools that should be used?
I think, having a well-running corporate enterprise is the key issue. Ultimately, that is what is the backbone for stability, for growth, whether you call it wealth generation, whether you call it growth, whether you call it nation building. Unless the enterprise runs well, you can't really get the benefit out of it. So I think the competence of family members becomes very crucial. What is the training schedule for them? What is the program getting inducted into the business? How do we make sure that they are actually earning the respect of people they are working with?
Sir, may I just ask one side note? When you talk about competence, is there a mechanism to evaluate if the competence is actually there in an unbiased manner? Because sometimes that's a tough decision to make. At the end of the day, it's a family member, a loved one. But if one finds that the competence is simply not there, or the affinity is simply not there, what does one do?
No, it is a challenge. I 100% agree with you. But I think the reality is, if the competence is not there, one sees the business not moving in the direction it is supposed to move. The youngsters who come, they have to go through a grind and move up the ladder rather than being able to sit on top from within 5 years as if they have a right. I think that's when things start going wrong.
Though, if I was to just uncover what Ajay and his family have actually done, they've created the forums where family members who are really the primary owners in that business or are running the business have to have the chance to communicate actively, continuously, to be completely transparent with business results, to align on the intent of the family, and be part of the forums of the company where they are constantly being updated on how the company is doing. And some of them are the normal company boards, and some of them are created for the family to manage itself.
So if we had to make a sort of a very quick guide, and of course it will change from family to family, from business to business, of some of the structures that can be utilized, what would you say?
So I would say either you create a family council where and you have to answer in that, which are the family members that are going to be part of that council, what are the types of decisions that will come to that council, and how will those decisions be taken? And will they be done before you go on to the board or the company management board or whatever the company structure is? Because as Ajay had originally said, there is managing the family and there is managing the company. The managing the company, the SEBI has laid out the rules that you have to follow. But managing the family, you can't leave it to chance. You have to create some structure where family members can actually debate and think about the issues that the company is facing and get agreement so that their shareholding is expressed through one voice. So he said, we have told different family members to take charge of different SBUs. Where actually that family member is taking most of the decisions, but the others are, part of a board where they are advising each other. But the right is with that person. If you know what I mean.
Yeah.
So that's the way the family has to create a structure to manage itself, find alignment, first be informed, then find alignment, then communicate that alignment with one voice. And not allow these cliques to form, saying he's Ajay's man, he's Vikram's man, he's so-and-so. Then you are in trouble.
Yeah. Let's get the last word on this from Mr. Sriram, and the advice to people watching this who are hoping to have a family business that spans decades.
I think, the passion which family members bring in when they start a business is very powerful. I think that's a great strength which can continue. But you have to actually move to first set the enterprise correctly, which means getting good people, taking advice from people outside, how to grow the enterprise. As you're moving forward, I think the communication and understanding between family members are crucial for harmony. So that's where, as I mentioned earlier, communication, intention, transparency, all these play a very crucial role in ensuring that the family moves together with the right objective. We've also written a family constitution, and people should, because that's what brings in alignment in the thinking among family members of what is their purpose, what is the reason for being in the business, and what do they want to see 20 years and 40 years down the line. So I think some of these alignment activities are crucial to really go forward and have a successful enterprise. Of course, managing the business itself is crucial in today's world, especially. Business processes, business systems are absolutely essential to ensure that there is proper management of the enterprise. So you move at a pace by which the businesses can manage and grow at the right pace. But I think family alignment and growth of the business go together. How to keep that going together is very crucial for future success.
Absolutely. Thank you so much, Mr. Sriram, for joining us and sharing your wisdom and your experience. Mr. Janmejay Sinha, thank you so much.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
From an investment perspective, it's very hard to argue in favor of buying a house.
You aim to buy a property, it is not going to be less than a crore for sure. The property registration numbers are going up. So there is clearly somebody buying.
Yeah, people have to take 15, 20-year loans. It's not like they can afford, especially in places like Mumbai.
If you can afford, you will find maximum number of people wanting to buy. It is, of course, one of the factors that it is an intergenerational asset, but does not necessarily mean that you should not own one for your own self.
Sure.
Now, when we're talking about buying, I'm not necessarily saying that you buy a property in which you really want to live. There are few things that you have to look beyond calculations. I would not be able to take a shower any day because I would say I'd buy shares of Hindustan Lever and not buy the shampoo.
The buy versus rent conversation is not new. In fact, in the last 15 years, I've hosted the same debate numerous times. But a lot of young people now are veering in the direction of rent and never buy. The math is certainly compelling. You look at the price of real estate in places like Mumbai and New Delhi, and the price tags are enough to convince you to not buy even before you start with the calculations. But my guest today has a strong case for buying a house, and I'm curious to find out what it is. Harshvardhan Rungta, co-founder of Rungta Securities, thank you so much for taking the time.
Always a pleasure, Alex.
So I know that I've had this same conversation with you maybe about 8-9 years ago, where I had a property consultant and I had you, and we were speaking on a podcast. And even at that time, it was said that from an investment perspective, it's very hard to argue in favor of buying a house. But we seem to have veered much further down towards the side of not buying at all. Why do you think we've come to this point?
So, well, Alex, couple of points. One is that the real estate has become so expensive as a ticket size. So if a person is working in a metro, and if you aim to buy a property, it is not going to be less than a crore for sure. I mean, if it could be a multiple of crores, but you will not find it less than a crore. Now, if you're in a career looking to buy a property, it puts a lot of financial burden on that individual. So we've gravitated towards a point convincing ourselves that renting is better than buying. Even if you have aspirations to buy, I think the numbers are put before you saying that, the yield on residential property is 2%. Might as well you put that money in a fixed deposit, earn that interest and pay rent, and you still have excess, surplus to yourselves. I think this narrative has been generated from that point. One, because of the affordability and the ticket size of a real estate. Secondly, because people are traveling and moving around different cities now.
That's an important point, because I think a lot of people over the course of COVID-19 have found that they were able to work from home or from different locations. And I think a lot of people have realized that they don't want to necessarily be tied to one job. They want the flexibility to move jobs. That is a strong reason why people are veered.
Yes,
right?
absolutely. So you have a choice now to search for a job which is in a different city altogether, or your employer may permit you to work from home in another city, and while their headquarters may be in Mumbai, you may be working in Guwahati for all you know. So these possibilities have now been enabled, which further gravitates towards saying that why do you want to then own a property when your job is on the move? The ticket sizes are unaffordable, so why not just rent it? So I think this narrative has been, cumulatively generating pace based on all these factors together.
I wonder what you think about this, and I've had this conversation with different people. The propensity of a lot of young people to not have children as well, because you're hearing more of this double income, no kids kind of a situation. And no judgment here or anything, people are veering towards that as well. And that puts less pressure on people to say we need to create physical real estate for the next generation. And that could also be contributing to this idea, right?
To a certain extent, yes. But when you create real estate, it's not necessarily, it is of course one of the factors that it is an intergenerational asset, but does not necessarily mean that you should not own one for your own self.
Sure.
I mean, there's going to be a time when you're not going to be earning. Everybody is not, you're going to retire at some point in time. Now, at that time, you would always want some kind of stability in terms of a house that you own for yourself. You don't want to be moving around during your retirement period. Suppose you're 70 years of age, and you don't like your landlord, the landlord doesn't like you, or something goes wrong between the two of you. He asks you to move, and then of course you'll get another place for rent. It's not that you will not get something, but do you really want to keep doing this all your life?
But that is the argument for buying. I'm still trying to figure out all of the reasons why people are now saying, look, I don't want to buy at all. There's also the aspect of the last 6 years that people have experienced pretty good returns in the capital markets, haven't they?
Yes. So Alex, the entire narrative, what I understand, towards renting and not buying has been due to the ticket size, due to affordability, quite honestly.
Right.
Ask any person who can afford an apartment. If you take 10 people who can afford an apartment, and out of which 9 are not buying, it's not because of any other reason. So if you can afford, you will find maximum number of people wanting to buy. I believe it's only the narrative originating out of non-affordability, where you try and convince yourself and others, saying that, look, there is no point in buying, might as well rent it. So I think it's more of a consolation kind of a, approach rather than rather than really logically thinking about it. I'm telling you, pick up 10 people and ask them who can afford. Would you be buying a property? Most certainly they will be.
So what is the case that you're making? Ultimately, you're saying that people should own real estate. It's a necessity, right? It's not something that is necessarily negotiable. It is roti kapda makan. That's what you're saying.
Correct. So I'm saying, see, there are two ways that you'll have to look at things. Everything cannot be looked at logic, and weighed in the parameters of logic. Now, if you're going to ask somebody to say like, hey, if I had 1 crore of rupees, I put that in a fixed deposit, earn 6% or 7% on it. With that interest or lesser than that, I can stay in the property worth 1 crore. I mean, that is logic, right? But everything doesn't work like that. In that context, I would not be able to take a shower any day, because I would say I'll buy shares of Hindustan Lever and not buy the shampoo. And then I'll be wealthier 10, 20 years down there, 30 years down there.
The whole coffee argument, right? You don't drink coffee every day, instead invest in a share of the company that sells the coffee.
So that doesn't make sense all the time. So there is a basic necessity, human necessities of food, clothing, shelter. The roti kapda makan that we spoke about, right? Now, when you have roti kapda makan, the food, clothing, shelter as logics, you don't put numbers and you don't start calculating returns on that, and then you evaluate whether I should wear clothes or I should rent clothes. I mean, you can even get into that argument, right? But theoretically speaking, the wedding dress that you wear ideally should be used only once. And that costs a couple of lakhs. So you'd say that I have bought this piece of a ghagra or a sherwani, and I'm using it only once, which is worth about, say, 2-3 lakhs. So the cost of wearing that is 3 lakh of rupees. Might as well rent it out.
Irrespective of the price tag, I'm saying even somebody who's not earning as much, for them a 60,000 rupee ghagra or 70,000 rupees, the equivalent of somebody who's earning more and spending 2 lakh, 3 lakh, effectively, based on relatively speaking.
The question is that if you're wearing it only once, then somebody puts in your mind saying that if it costs 60,000 for example.
Why are you doing that? Just rent it.
Yeah, might as well rent a sherwani instead of buying 60,000 rupees worth of a sherwani. So that logic doesn't apply, right? At all times. So I'm saying there are few things that you have to look beyond calculations. There are few things that you don't have to get into a narrative which is being formed, saying that, it doesn't make sense to buy. Now, what are the reasons that you would want to consider? So one, as I said, it's a basic necessity, right? There are other things that come along with it. As I said, let's start with, say, retirement. Now, if you, and at the same time, I'm not saying that you need to buy a house which is beyond your affordability.
We'll come to that in a bit, but then let's list out the points that you
So
made.
the one is that, you'd always want to have a secured roof over your head. Now, how do you get that unless it is your own?
You can't.
Because you cannot get that. So you'd want to, at the end of everything, want to make sure that you have a roof to yourself, where you're not under the threat of being asked to leave. Rents are not affordable. So you're worried when my rental agreement comes for renewal, what is the landlord going to throw at me? So you don't want to get into that kind of a scenario. So you want one place for yourself where you can peacefully live with yourself and your family. Okay. The other, if I'm talking about a case of uncertainty in life, in your career, in businesses, a lot of surprises could come through.
You heard cases?
There are two cases I can talk about. In fact, one case is during COVID, a friend of mine was working at a very senior level in an MNC. He was in Mumbai and he was in a rented apartment. So we had a conversation a couple of times saying that why don't you buy, which you can afford, of course. So he said, no, rental works better in terms of return on investments, etc. I said, okay, fair point. Now hit COVID and he lost his job. And, of course, he sustained it for a month or two. And thereafter he was like, now I need to do something about it. Let me go back to my hometown. So I said, what would you do? Because the idea is that I don't want to pay this kind of rent that I'm paying. So I'll go back to my hometown. So I said, why would you go back to your hometown? What about the house over there? So he said, I have an ancestral home over there where I can go back. Now think of it. If his ancestors would have also thought the same, and said that, look, I should rent it out and never make a property.
But the affordability of real estate at that time, Raj, was very different.
We'll come to the affordability part of it, as I said.
Correct.
So we'll touch that point. But I'm saying the logical side of things in life. You'll never be able to buy a luxury car if you think that a car is only a mode of transport. Then even a basic four-wheeler is good enough for you. So we're not getting into all of that. So I'm saying, imagine a situation that the roof that you have for yourself is basically during those tough times that you may face in your life. You may be into a business which is doing very well today. Tomorrow if something happens, and if you can't afford the rent, then what do you do? So I have had cases where people cannot afford renovating their house because they're going through a rough patch in their life, but at least they have a roof to themselves. So they walk into a house which is not renovated, but at least they have a place to sleep. Now, if you cannot afford even renovating your house, what if you cannot afford paying the rent?
Fair enough.
You don't even get that margin of safety to stay in that city to explore something more, right? Like my friend, as I said, he didn't have the margin of safety.
So this is one where this person lost their job. What is the second case?
The second is if you're a parent, and now you have children who are going to get into the career. Not necessarily they will settle into a career immediately to be able to afford a rent, right? And that time you tell them that, look, hey, it doesn't make logical sense to own a property. I don't have, because I always thought like this for myself. Why don't you also think like this and go and take a property on rent? Doesn't work like that, right? If you can give them a security.
Okay, that is an ideal case, but I think a lot of people go through, and a lot of people actually, frankly, work in cities outside of their hometown, right? So, I mean, even my case, my parents live in Pune. I've been renting since I was 18, 19 years old, right?
No, fair point, Alex. So I'm coming to now again that where to buy, affordability part. It's a logics to buy. Okay, we've had certain cases where the daughter has not settled in their marriage and she comes back for whatever reasons. Now, again, what do you do in a situation like this when you say that, look, I am on rent myself, I don't have space in my house, you go and take something on rent again. So I'm saying there are several scenarios. Now, it may not eventually...
This is again a security angle, right?
Security angle. I'm talking, the house is only for security purposes I'm talking about. I'm not even broaching onto the topic of investing and the returns that you generate on it. I mean, I'm just taking it as a food, clothing, shelter. I'm just taking it as that. You don't apply too much of mind into these things, is what I'm trying to say. The moment you start applying mind to this, as I said, you can't take a shower, you can't eat, you can't drink coffee, nothing.
So, okay, so the case is made and it's a strong case, but then my counter to the first case that you had is that this individual lost his job and he had to go to his hometown. Hypothetically, if he had bought a house and we had bought that house on EMI, effectively that house is not his, it's hypothecated to him.
Correct.
He owes the bank, and in the event that he does not have an income, he's not able to pay the EMI, effectively he would lose the house. So that's not a pleasant. And people have to take 15, 20-year loans. It's not like they can afford, especially in places like Mumbai. They have to take very large loans, Harsh. So how do you deal with that situation?
Now, in this particular situation, he left Mumbai because he couldn't stay in Mumbai any longer.
Right.
Had he been able to, no, because he didn't have a regular source of income in that context, so he couldn't pay the rents.
Yeah.
Now, if he had the house of his own, the EMI, the banks gave a moratorium at that point in time. When you couldn't afford, they said, okay, fine, I'll come back to me later on. I'll give you a moratorium of 6 months, etc.
But that was COVID. I'm saying, it's a black swan event.
I'm talking about one situation. I'll come to the other situation as well. In the other side, he could have stayed in Mumbai and found a job for himself. But he needed time, which he did not have in this particular case. Now going back to his hometown and applying from there again, it's a new exercise altogether. Correct. Being here in Mumbai, it was easier for him to have networked and got something through. But anyways, the other scenario saying that if it's not a black swan kind of a thing, where it's not COVID and you still lost your job, banks do accommodate. If you go back to them and say, look, I've lost my job. I'm looking for another job. Give me a break for 2-3, a pause an EMI for 2-3 months. Give me some time. They do accommodate. It's not that they don't accommodate. But at least have the roof to yourself.
Sure.
So again, now, when we're talking about these scenarios, these are all hypothetical situations. Yes. Okay, now an individual may not be requiring to, and God forbid, he needs to go through something like this. But if something needs to go through, imagine a situation where you don't have a roof to yourself. I'm only talking about, while you're putting all the time, you're talking about one scenario where an interest, the returns on real estate is negligible.
No, I'm talking about, just on the case that you've spoken about, where you're saying either you're renting or you're buying a house. If you've bought a house and it is on EMI and you lose your job, then it's compounding the issue, is it not? But I get the point that you're making. You can negotiate a moratorium.
I want to add one more point here. Now, when we're talking about buying, I'm not necessarily saying that you buy a property in which you really want to live.
Right. So that's where we want to come to, right? So affordability, at the end of the day, we circle back to that. And so therefore what you're suggesting, and if I understand you correctly, Harsh, what you're saying is if you're working in South Bombay, it does not necessarily mean that you buy in South Bombay.
Absolutely.
And you don't necessarily have to even buy a property that you're going to live in immediately. You might even buy it in a tier 1 city outside of where you're staying right now. I'm wondering if this is what you're saying. If you have family, say in Pune, or if you have family in another place, in even Kolkata, or in certain parts of North India, in beyond Gurgaon, or even Noida or something like that, you can buy a property there so that you have the security of having a flat.
Correct.
Right?
So all that I'm trying to say is that during your lifetime, try and own one house.
Sure.
It need not necessarily mean that it has to be in the place of work that you're.
Right.
I'm just saying buy one house for the security purposes. If everything goes bad, okay, you can go back to that house. Now, hypothetically, you're working in Mumbai, but you have some base or something, you come from Pune, for example. You said your parents are in Pune. Or you're coming from a place, say Nagpur, for example, or you're coming from Delhi, or you're coming from any other place. Just ensure you have one house to yourself.
Sure.
It could be an ancestral house which you've inherited, so that is your house.
Great.
Then you don't need to buy another one. Okay, if you already have something inherited, if you don't have ancestral house, you don't have something that you've created on your own, then there is a problem.
So then let's get to it, right? So you mentioned that if you have a house to your name, and I think that it's important to be very clear about these things, right? Especially if you have siblings, then your parents need to make it clear, is it meant for one or the other, or is it meant for both, right? Or three, as the case may be. But if you have property to your name, let's talk about when you don't have property to your name, right? At what point do you go and create this asset? Because on the one hand, you're saying that you need to have that security. On the other hand, you're saying that your earning potential in the early years is not necessarily great, and you will be straining. And the ability to get a head start on your investments, equally, people say you should start early. And you create a corpus. Suppose you're 35 and you've struggled and you've managed to hit that 1 CR, which is the landmark for a lot of people. Do you want to break it at that point, or would you say that you should use the time, another 5-7 years, where you can accumulate a lot more, create a large enough corpus, and then pay and buy a house?
Yes. So one thing you'll have to keep in mind that there's going to be a down payment that you have to make. Okay. So affordability. Now come to affordability. So all that we're trying to say is that own one house which is within affordable limits. So affordability would mean that first you'll have to ascertain What is the place you want to buy that property? So it could be a small 1-bedroom apartment, it could be a studio apartment for that matter.
Sure.
Again, you have to work your affordability. You have to be able to pay the down payment, which is 20%. So if you're looking at a property worth 50 lakhs, or you're looking at a property worth 1 crore, 10 to 20 lakhs is what you have to pay from your own pocket. So be ready for that. The moment you've accumulated, then that means you're ready to buy something. The second point is you always have to be mindful of the EMI commitment.
Yes.
It should never cross 50% of your take-home salary.
And this is all EMIs or just the home loan?
All EMIs.
All EMIs.
So if you're having a personal loan or car loan or something, all put together, your EMI per month should not be more than 50% of your take-home salary, not C2C.
Sure.
Okay. You have to be very careful that your EMIs don't cross 50%. Right. Now, if that means that the size of the house needs to be reduced further, or you need to go to some other city altogether, you may have to consider that. Okay, and that city cannot be an absurd city from nowhere.
Yeah,
I mean, if
you might want
Mumbai,
to at some point say that if I'm not in this job, I should be able to go and live there.
Correct. So eventually you should be able to go and live there.
Yeah.
So if you're in Mumbai, for example, then you may look at Pune, for example, and you don't need to be in the prime location of Pune.
Yeah.
It could be just one house lying there that in case of the worst case scenario, you can go back and have a roof to yourself.
Or even Navi Mumbai, you probably
Navi
get
Mumbai for that matter, or whichever proximity. So
Sure.
other cities would have a similar kind of a situation where you're in the heart of the city, the suburbs or the distant suburbs of that city would have affordable housing.
Yeah.
So there are ample number of opportunities for affordable housing.
Sure.
So if somebody says that, look, I don't find anything, it could be because you don't like anything. So that's fine.
So that definition is great. You say 20% you should be able to pay as down payment. You should have that kind of liquidity. And 2, you should be able to put 50% of your take home as an EMI. So that's a good definition to have. Now let's talk about the current scenario, because I think, I mean, of course, there are some projections, Harsh, that you could have another 50 basis points of cuts, but you already had some reduction in the rates, right? So if anything, now is a good time if you're considering the festive season is near. And I don't know if you're going to be able to identify a property, but maybe you should go out looking. Having said that, what should you bear in mind about the way that you pay, right? Because we've established that you only go out at this point if you don't at all have a house and if you can afford it. And so with that caveat in mind, what is the way to do it? Because there are numerous calculations for this as well.
Correct.
Should you prepay? Should you not prepay? Should you invest the surplus? What do you do?
So the first thing is very clearly, the discussion we are having right now is for people who can afford and have been told not to buy because of the calculations.
Yeah.
Okay, so we're very clear on that part. If you are within that bracket who's not finding it affordable as of now, then this could be a thought for you to action it tomorrow when you come into the affordability bracket. My only grievance that I have is those people who can afford have been brainwashed to believe that it is not good to buy.
Sure.
So we're having a discussion purely from that
Correct.
point.
And we've established that they should go out and buy at least one house.
Correct.
If they don't have ancestral property.
If they don't have any property themselves,
Sure.
have one house that you can be secure for yourself.
Yeah.
That's all that we're trying to say. Now coming to how should you go about designing it? Okay, so one is, if you're buying for yourself, which could be potentially a place that you'll be living in case everything goes wrong, then you need to make sure that you don't take a decision in haste. Okay, because now suddenly somebody will say some pocket in Pune is a popular pocket, and now some lot of action happening over there, some highway will come over there, and you know, when you put all those things, then you get, you deviate from the main objective, which is eventually you may have to live there.
Yeah.
Okay, so identify something at your pace.
Yeah.
Do not rush into it, because the moment you rush into it, the other factors take precedence and not the basic concept which you had thought about. So that, take your time. Do not get lured by some offers coming by builders or RBI going to cut rates.
And don't even think of potential resale value and all of that, right? Would you say
eventually, yes, but you'll see why I say you'll have to look at resale value, because eventually there has to be some marketability of that property.
Yeah, sure.
You may not
but
want
it's
to sell
hard
it.
to sell. It's hard to sell real estate.
So in fact, again, now if you want me to give you an example of one of our clients who had this kind of a thing. Now, they were going through a tough time in their life, okay, for whatever reason. They went to business, the business was not doing well. Now, they sold off virtually everything else that they had, okay, that included the financial assets, they sold off the jewelry, they sold off everything that they had. They even put the house out to sell at that point in time when they were not doing well, and it was a stressful period for them. It took a while before they could even finalize somebody to look at buying it. And in that period, while they could not sell their property,
things turned around.
Things turned around for them.
Oh, great.
So in that context, the house, because it was illiquid in nature, It just
There's
got
always a
retained.
silver lining.
There's always a
isn't
silver
there?
lining. Now, in
Okay.
this case, everything that was liquidable got liquidated, including the jewelry, including financial assets. It's T+3. The moment you sell, the third day you'll have money in your account, right? So all financial assets, everything got sold. Whatever could be sold got sold. What could not get sold or was illiquid in nature in that context, or took time
So
to.
there are positives to it being illiquid.
So that's exactly
as
what I'm trying
well.
to say.
Okay.
I mean, it could even work in your favor when it is illiquid for that matter.
Sure.
Now,
but I mean, but a lot of people do have trouble selling property that they've
of course,
bought. Yeah,
of course.
But having said that, coming to that original question, which is if you have decided, and maybe they've listened to you and they've decided to change their mind and buy a property, what are the initial few things that you would say you should do?
So one is, of course, affordability. Very clearly,
Sure.
I'm emphasizing on that part. I mean, make sure you can pay 20% or even more for that matter. Ideally, 20% is good because you'll have other financial responsibilities which you don't want to put everything into real estate. So 20% of the house you should be able to afford for sure. The second thing is the EMI, again, I'm emphasizing, all EMIs put together should not be more than 50% of your take-home salary. Be very mindful of that and don't estimate that in future I'm going to get a promotion. Now, when that promotion comes in, I can afford it, so might as well extend a little bit today. No. I would rather wait for the promotion to come then because there's no hurry. You're not going to move in today in any case. Whatever is your present income, it should not be more than 50% of that, very clearly. Third, you have to be mindful that it is a property eventually if you're not going to, because see what happens is with your career, you may want to advance your house as well. Today, you may have bought a 1 BHK. Now, 3 years, 5 years down the line, you believe that, okay, now I can afford probably a 3-bedroom apartment. So you may want to sell that 1 bedroom and buy a 3-bedroom closer to your workplace now because you've now probably grown in your career. So there has to be a marketability of that product eventually. So don't be, so that's where
completely blind about it.
That's where ancestral properties don't work because they are not saleable to that extent because it's, it's intermingled with a couple of other family members and there are a lot of sentiments around it. So ancestral property is the worst case scenario. I mean, otherwise try and accumulate and generate one property yourself. Do not get lured into offers because this is not a decision for an investment. So don't look at it as a short term. Take your time to decide. Look at the locations because the property also need to be maintained. If it's very far away, you're in Mumbai, nothing to do with Bangalore, and you buy a property in Bangalore, you'll have to travel back and forth to take care of the property. So might as well buy somewhere where you believe it's easy to manage. It's conveniently located. It has a resale value. It is within affordability. I think these are the basic parameters. And if you can afford, then do not get confused with the narrative of investments being better than. I'm into the financial services business myself.
Yeah.
So I am with surety telling you that if you put numbers to this discussion,
it will not
of
make sense.
Buying versus renting, buying will never make sense.
Yeah.
And so it's an argument which we're not even getting into. There are other non-monetary benefits that we're talking about. It's a wealth preservation tool. You'll find all the super rich buying properties now. So they also have better opportunities to put that money for returns purposes, right? But there's something that they're looking at for which they're buying real estate. So just change your mindset a little bit. Do not
be open to the idea.
Correct.
And so therefore, I think it's a strong case that you're making. Harsh, thanks so much for joining me today. All right. Well, that brings us to the end of this edition of MoneyWise. It's been an absolute pleasure bringing it to you. Let us know what you think. And do stay tuned. This is NDTV Profit.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies,
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside board.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, Friday cheer just about returned to the market. Nifty managed to shut shop in the green. Sensex also clawed back after giving up more than 150 points around noon. Most sectors ended the day in the green. Auto and telecom stocks inked gains. Select defense countries were also in good shape after the Modi government has unveiled India's biggest defense upgrade plan since independence. The Indian rupee slipped to a fresh low of around 88.36 against the US dollar on September 5 amid likely foreign selling and pressure from the US tariff actions. The currency is currently trading near its lowest level in recent months, weighed down by concerns over trade tensions and also capital outflows. Now, in the past week, the rupee has fluctuated between approximately 87.88 and also 88.32 against the US dollar. Now, analysts suggest that rupee may remain under pressure in the near term as markets await further clarity on the geopolitical and economic factors impacting the foreign exchange flows. Indian IT stocks saw a sharp decline and then a partial recovery during early trade today following an unconfirmed report that US President Donald Trump might impose tariffs on the IT sector. So the Nifty IT index dropped as much as 2.3%. Key Indian IT exporters such as Tata Consultancy Services, that is the TCS, Infosys, Wipro and HCL Tech, experienced share price declines due to concerns over the potential impact. So the US is a major market for these firms. However, Bloomberg later denied the report linking to Trump to any imminent tariffs on Indian IT companies, helping stabilize the market somewhat. Now, the earlier US tariffs imposed on Indian goods in August, including those targeting Russian oil imports, had already created trade tensions. Bluestone Jewelry and Lifestyle reported strong Q1 performance with key metrics showing robust growth. So the company listed on BSE and NSE on August 19 continues to strengthen its market position. Repeat revenue ratio hit of 50.7%, reflecting solid customer loyalty. Now, customer numbers surged by 34% and average order value also rose by 23%, signaling strong demand. Zydus Life Sciences subsidiary has inked an exclusive licensing and supply deal with Synthen BV of the Netherlands for ozanimod capsules, a generic version of Zeposia targeting the US market. Now, Synthen, one of the first filers, secured tentative FDA approval within 30 months, qualifying for a shared 180-day exclusivity period upon launch. So, Zydus will handle commercialization while Synthen manages regulatory approvals and also the manufacturing. So the US market for ozanimod, used for multiple sclerosis and also ulcerative colitis, is worth $637 million, which is nearly 5,600 crore rupees. Yasho Industries has signed a 15-year supply agreement with a leading global multinational for lubricant additives set to generate 150 crore rupees in annual revenue from Q4 of FY27, equating to 23% of its FY25 top line of 673 crore rupees. So the Mumbai-based specialty chemicals firm will receive an advanced construct, a dedicated facility at its Pakhajan, Gujarat plant, with completion expected in 12 to 18 months. So pricing will follow a pre-agreed formula, ensuring stable margins. Shares have jumped 4.7% to nearly 1,861 rupees, with volumes up 30% to 4,870 shares. Ola Electric shares dropped nearly 6% following Japan's SoftBank Group selling a 2.15% stake in the company between July 15 and also September 2nd. SoftBank's investment arm, SVF2 Ostrich LLC, offloaded about 94.9 million shares, reducing its holding from 17.8% to 15.6%. Despite the stake sale, Ola Electric has seen a strong rally in the recent weeks, driven by government incentives and also approval under the production-linked incentive scheme for its Gen 3 scooter range. So the company recently revised its battery cell manufacturing plans, targeting 5 gigawatt per hour capacity instead of earlier 20 gigawatt hour capacity goal by 2030. So shares have fallen around to 60 rupee, trading below the IPO price of 76 rupees. Vodafone Idea rallied 10% and also hit the upper circuit on heavy trading volumes, extending gains for the third day. The stock reached 7.27 rupees, driven by renewed investor interest, and also reports the government is seeking a strategic investor to infuse over $1 billion for a 12 to 13% stake. Now, this move aims to support the debt-ridden telecom giant struggling with nearly 83,400 crore rupees in AGR dues and also high annual payments. So the government and promoters may dilute stakes to stabilize the company. Vodafone Idea continues exploring non-bank funding sources to sustain capital expenditure and also network expansion. Shares of Brainbee Solutions, FirstCry's parent company, surged up to 14% to 403 rupees in trading after the government's GST Council cut taxes on key products. So the GST rate on personal baby care and beauty products was reduced from 18% to 5%. Baby napkins and clinical diapers from 12% to 5%, and toys from 12% to 5%. Stationery items like pencils and geometry boxes will face no GST. Now, this tax relief is expected to lower the prices and also boost consumption, aiding FirstCry's revenue. The company reported a 12% revenue rise in Q1, but also a margin contraction. PNC Infratech has emerged as the lowest bidder for a 495.5 crore contract from Bihar State Road Development Corporation to construct a high-level bridge and also approach road on Hathuri Atrar Bavangama Orai Road in Bihar, spanning 21.3 kilometers, to be completed in 1,095 days. So the company also secured a 297 crore rupees of project from Airports Authority of India for developing Lal Bahadur Shastri International Airport in Varanasi, involving runway extension and also strengthening with an 18-month timeline, with an order book exceeding 17,000 crore rupees. As of Q1, PNC Infratech strengthens its infrastructure portfolio. Biocon shares rose 2% following the US Food and Drug Administration's recent inspection at Biocon Biologics drug substance facility in Bengaluru. So the FDA issued a Form 483 with 5 observations. all procedural in nature. Importantly, these observations do not relate to data integrity, systemic non-compliance or quality oversight. So the inspection covered manufacturing units, quality control labs, microbiology labs, and also warehouses. Biocon Biologics will submit a corrective and preventive action plan within the stipulated time frame and is confident in addressing the observations promptly. Suntec Realty shares soared 12% intraday today, hitting 496.8 rupees on the NSE, driven by news of a 500 crore rupees of fundraise via preferential issue to fuel its expansion. Now, despite a 13% year-to-date drop and 24% decline over the past year, the stock reflects strong investor optimism. So quarter one of FY26 saw pre-sales rise 31% to 657 crore rupees and also collections up 3% to 351 crore rupees with a net debt to equity ratio of 0.02 times and also 108 crore rupees of cash flow surplus. So a new Andheri redevelopment project adds 1100 crore rupees to its 40,000 crore GDV, with management targeting 50,000 crore rupees by FY26, expecting over 30% pre-sales growth and also improved collections. RPP Infra Projects has secured a 134 crore contract from the Maharashtra State Infrastructure Development Corporation for the improvement of the Mathiran-Neral Kalamb Road in Karjat, Raigad district. So the letter of acceptance was received on yesterday. The project to be completed within 12 months enhances the regional connectivity. RPP Infra's order book under execution stands at 2,762.89 crore rupees as of March 31. TD Power Systems reported strong quarter one of FY26 consolidated results with significant growth compared to the same period last year. Revenue rose 35.8% to 372 crore rupees from 274 crore rupees, and also EBITDA increased 42.2% to 68.8 crore rupees, with margins expanding to 18.5% from 17.7%. So net profit has jumped 41.7% to 50 crore rupees versus 35.3 crore rupees a year ago. So the order book stood at 1,468 crore rupees as of June 2025 with a book-to-bill ratio of 1.14 times. So order inflows grew 32% in the quarter to 392 crore rupees. The company also expects to revise its FY26 revenue guidance upwards, maintain margins, and also fulfillment of increased orders will be supported by a third manufacturing plant starting in FY26. Domestic business sees marginal growth potential boosted by hydro refurbishment tenders. Moschip Technologies shares surged 48% over 6 sessions, hitting a 52-week high of 279 rupees. So this is fueled by India's semiconductor ambitions showcase at Semicon India 2025. Prime Minister Narendra Modi's engagement with global chip CEOs and also the GST Council's rate cut from 28 to 18% on electronics has boosted the sentiment. So trading volumes have spiked with 36.64 lakh shares worth 87.04 crore rupees exchange. Moschip, which is a key player in silicon and product engineering, benefits from the India Semiconductor Mission 2.0. India Resurgence Fund has made an open offer to acquire up to 3.85 crore equity shares, representing 26% of the expanded share capital of Sri Digvijay Cement Company. Now, this follows an agreement with the current promoter, True North Fund, to sell up to 50.1% stake to IRF entities. Upon the completion of the transaction, IRF will gain control of Sri Digvijay Cement, with True North stepping down as promoter and also being reclassified as a public shareholder. So the open offer price is set at 92.2 rupees per share, 92.2 rupees per share, slightly discounted to the last closing price. Bharti Airtel, promoter of Indus Towers, acquired 68.76 lakh shares between August 25 and also September 1, further solidifying its majority stake in India's largest telecom tower company. Now, this follows a share buyback that raised Airtel's holding to 50%, making Indus Towers a subsidiary. So today, Indus Towers shares rose 2.93% to 333.6, with the intraday high of 333.85 rupees and also low of 324.5 rupees. Trading volume surged 859.64% to 3,968 My bad. This is 39,68,898 shares against a 5-day average of 4,13,582. So the stock 24.69%, which is below its 52-week high of 442.95 rupees, and also 6.72% above its low of 312.6, and this also reflects a market cap of 88,009 crore rupees. So the purchase aligns with Airtel's strategy to strengthen its telecom infrastructure grip, also which is amid robust 5G rollout demands. Prostam Info Systems has been awarded letter of award by Karnataka Power Transmission Corporation to establish a 150 megawatt is to 300 megawatt standalone battery energy storage system at the 400 kV Doni substation in Gadag district, Karnataka. So the project secured via tariff-based competitive bidding on a build-own-operative basis for 12 years offers a rental of 2.54 lakh per megawatt per month. So this is translating to 45.72 crore rupees annually. It also includes viability gap funding of 27 lakh per megawatt hour, or 30% of the capital cost, whichever is lower. Indus Towers saw a block trade of approximately 1.2 million shares, with stock rising 2.34% to trade at 331.7 rupees. So the share price has fluctuated between an intraday high of 332.5 and a low of 324.5, with overall trading volume significantly higher than the 5-day average by 848.6%. So the stock is currently trading at 25.12%, which is below its 52-week high of 442.95, and also 6.1%, which is above its 52-week low of 312. So the market capitalization stands around 87,508 crore rupees. Recently, the company's approved expansion into African markets, including Nigeria, Uganda, and Zambia, which is aiming for revenue diversification despite some investor concerns. Tata Group owned Indian Hotels Company, operator of Taj Vivanta and Ginger brands, reported a malware incident affecting select IT systems on September 4. So the company swiftly acted to contain the issue, notified that relevant authorities, and also have continued to monitor it closely with no impact on the business operations. So shares have risen 0.12% to 775 rupees, with low trading volume of 9,929 shares, which is compared to a 5-day average of 66,568. So the stock is down 13.28% from its 52-week high and above its low of 646.5. US President Donald Trump announced plans to impose a fairly substantial tariff on semiconductor imports from companies that do not move production to the United States. He emphasized that the companies investing in US manufacturing, such as Apple, would be exempt from these tariffs. So Trump's move aims to incentivize the domestic chip production and amid a competitive race with China over advanced semiconductor technologies critical for AI development. So the exact tariff rate and timetable are yet to be disclosed, but his administration is pushing ahead with this trade measure to bolster US manufacturing and also reduce the reliance on imports. Gold prices are on track for their best week in 3 months as investors await the US jobs report scheduled today. Now, the market is focused on this data for clues on the Federal Reserve's next move on interest rates. Expectations of slower job growth and also a steady unemployment rate may increase the bets on a rate cut, which is supporting gold as a safe haven. So in addition, a softer US dollar is also boosting gold prices. The August jobs report is expected to show around 80,000 jobs added and unemployment steady at 4.2%. The Modi government has unveiled a 15-year multi-billion-dollar defense modernization plan, which is the largest since independence. The roadmap includes nuclear-powered warships, next-generation battle tanks, and also advanced AI-powered weapons. The army will induct 1,800 future tanks, 400 light mountain tanks, 50,000 tanks, mounted anti-tank missiles, and also 700 robotic counter IED systems. So the Navy plans 2 new aircraft carrier, 10 next-gen frigates, 7 corvettes, and 4 landing dock platforms with nuclear propulsion approved. So the Air Force will acquire 75 pseudo-satellites, 150 stealth bomber drones, precise munitions, and also over 100 remotely piloted aircraft. So the plan emphasizes AI, autonomy, and also space warfare for future readiness. The city is on high alert after a chilling WhatsApp message claimed 34 vehicles carrying human bombs and 400 kilograms of RDX are set to trigger blasts that could kill 1 crore people. So the threat received on the traffic police helpline from a group calling itself Lashkar-e-Jihadi comes ahead of the Ganesh festival's culmination. Mumbai police have tightened security across Maharashtra, though recent similar threats proved to be hoaxes. A viral video captured Maharashtra Deputy Chief Minister Ajit Pawar threatening IPS officer Bhagyashree Navtake in Pune today at 11 a.m., sparking a political uproar. During a road-widening project dispute, Pawar warned, "I will see how you stop the work," leading opposition parties to cry foul over power misuse. The BJP defends it as Pawar's normal tone, dismissing row as routine. So the incident amid public scrutiny has opposition planning protest, while the government calls it a heated exchange. Social media erupts with debates, intensifying the pre-election tensions in the state as investigations loom. In a stunning development, Daniel Levy has stepped down as Tottenham Hotspur's executive chairman after nearly 25 years at the helm. Levy transformed Spurs into global powerhouse, overseeing the construction of the state-of-the-art Tottenham Hotspur Stadium and also securing a Europa League title last season. However, fan criticism over transfer policies and also 17th place Premier League finish last year marked his tenure. Lionel Messi was in tears last night as he played his final competitive match in Argentina, leading the team to a 3-0 World Cup qualifying win over Venezuela. Now, the 38-year-old scored twice, earning a standing ovation from 80,000 fans as the Estadio Monumental. Messi called it a dream to finish in front of his home crowd, but remained cryptic about the 2026 World Cup. So with Argentina already qualified, the football world awaits whether the legend will chase another title. London City Lionesses have shattered the women's world transfer record, signing French star Grace Gayoro from Paris Saint-Germain for a staggering £1.43 million. The 28-year-old midfielder with 100 caps for France joins the newly promoted WSL side as their 16th summer signing, reuniting with coach Jocelyn. Backed by owner Michel Kang, this blockbuster move signals the Lionesses' ambition to compete with the WSL's elite Gayoro's debut and is also expected soon, though she may miss their opener against Arsenal. Well, with that, viewers, it's a wrap on this edition of Market Express, but please stay tuned to NDTV Profit and don't go anywhere.
Sridhar Shivram, Investment Director at Enam Holdings, joins us right now on the show. And Sridhar, good morning and thank you so much for joining in.
Thanks for inviting me.
No, the pleasure is always ours. You bring out points which a lot of mere mortals like me fail to look at first glance, and I'll come to those detailed points too. But just the broad 50,000 feet view, are you happy and enthused by the moves that have been taken? A lot of it was on predicted lines, but there was some better than expected delivery from the government as well.
So if you ask me, I'm happy with the moves that the government has taken now. We've been saying earlier that a direct tax cut benefits only 2 to 3% of the population, whereas any change in the indirect tax benefits 140 crore people and has a far-reaching impact. So I'm happy to see what has happened on the GST side, because this will have a much greater impact, but over time. So I think the problem is market often expects everything to happen the next day. That may not happen. We have a lot of other issues, on the geopolitical side or on the macro side. But if you ask me from the government side and RBI, they've done so much. There's only that much they can do. The rest is up to the corporates and the earnings and all the other factors to play out. But that's how markets are. They're never linear, right? You have phases. So I have no complaints. I think they've done everything, and markets will play out over a period of time.
Most certainly. Is this meant to be, Sridhar? I mean, yesterday I was talking to Madhu and Ramdev, and they were saying that the view was that, or one of my interpretation of the view was that it's almost a measure that is even bigger than the budget announcements that are made at times, this simplification. And it has, as you said, a longer term implication, and people should look at it that fashion, that it is a move of such a magnitude that the benefits will play out over a 12, 18, 24 month period, and think of them that way, and they will be very large in nature. Would you second that?
Yeah, so I think when I look at the details, it sort of gives me a feel that the benefits are more to middle and lower middle class, and that's how it should be.
Right.
You know, there are some, taxation which has gone up, some sin tax, and I have no complaints on that. It will neither have an impact to a large extent on the consumption either way, but the simplification and the reduction of taxes at the daily use items, those will have a longer lasting impact, and I think over a time it will play out. And the other thing is simplification, that you don't have so many tax slabs now, so it is a much easier and much simpler way. And I think I'll have to give full credit to the government for every reform measure that they have taken over the last, say, 3-4 years. And finally this, I mean, this is something that we've been saying, that indirect tax benefits more than a direct tax benefit. I'm not saying direct tax is not welcome. It is welcome, but
this is better.
I would prefer an indirect tax, and that's how it's played out.
Now, you've been a dove on inflation, and yes, I presume that you believe that this plus a set of recent moves are further deflationary or anti-inflationary.
Yeah, exactly. So I think not a lot is documented that a cut in GST also helps the CPI inflation. A rough calculation suggests that it should have an impact of about 50 basis points on a durable basis, because this is a cut in tax and the prices go down.
Right.
Now, will the entire 50 basis points stay? We are assuming at least 25 stays, because some price increases over a period do happen. But even a 25 basis points on a durable basis reduction is significant. So we were already on the dovish side as far as inflation is concerned. So our number for Q3 is around 2%, RBI is at 3.1. So we are almost now 100 basis points away from where RBI is. And I'm reasonably sure, which happened in Q2 also, that RBI came down closer to the number that at least we were suggesting. The same will happen for Q3 also. But the question is there more room for rate cuts? We think another 25 basis points, sure. And if Fed is supportive, that if Fed cuts some more, then we have more rooms. I think the joker in the pack here is how rupee is behaving. And so if RBI has to manage multiple legs, they'll have a close eye on how rupee is. And that may also determine whether they want to cut or not. But in our view, when we look at all of it put together, we think another 25 basis points, they'll have room.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa, whoa, whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching KYC and of course we are now starting to understand and assess how GST is impacting consumption, and at the forefront of that is ACs, fans, air coolers and the like, and Symphony therefore comes to the fore, and therefore the first question I'd want to really understand from someone like a Symphony is that how elastic is demand? Would demand go up significantly if the GST is to come down, which it will on the 22nd of September, and therefore what should we pencil in? The essential question is how much will volumes go up by given this GST rate cut that has come through? So that's going to be maybe my first couple of questions. The third question is going to be around weather patterns, and the weather has impacted volumes in Q1, but likely there's going to be a catch-up play in the second half of this year. As the monsoons recede, hopefully in September, can we start to see a strong sales growth come October as the heat before the winter kicks in, and whether we can fully catch up with the kind of sales loss we've made in Q1. That's what I'd want to understand, whether we can reverse that. A double-digit growth is what they've penciled in on a very, very strong base of FY25. wanting to see whether there's a positive bias to that commentary coming through. In terms of the third piece, it's outlook on foreign markets and new categories. Now, you've seen a bit of a leg up that the numbers got in FY25 because of China and the Chinese subsidiary turning positive. Can that kind of trend continue? Can the losses from foreign subsidiaries or the lower profitable subsidiaries, can they start to reverse and aid the numbers overall, especially where foreign markets is concerned? And can new categories continue to drive up growth and allow Symphony the scale it needs to expand margins? And of course, we've already seen a very large margin expansion. Can that continue? Do they plan to divest from any of the markets? This has been a recurring question, given that Symphony does ever so well in India, but not so well in some of the foreign markets. So is there a plan there? And last question that I'd want to ask is, what is the margin outlook? And we spoke about that, and we'll obviously look at the numbers as well. And when we do, you'll get a better perspective as to what I'm talking about where margins is concerned. We've seen quite a bit of change where the margins is concerned, FY24 versus FY25. Now let's talk a little bit about Symphony itself, what it does, and give you that overview with regard to what it does. It's a leading branded air cooling solutions provider. It, in terms of products, I will get to it, but it exports to 60 plus countries. The core is eco-friendly, energy efficient air coolers for residential, commercial as well as industrial. It's expanding into all weather, adjacent small appliances like fans as well as water heaters. That's the other key category they are entering, but currently smaller in comparison to the larger pie that they are focusing on, which is air coolers. The last piece is, it's an asset-light business, has a dominant position in India, and it has a pivoting international strategy. Now, let me focus on this for just a little bit more before I go to products. If we can roll back the slide, there you go. So, one asset-light business, it doesn't have a manufacturing facility. It has third-party manufacturers which manufacture for it, and it sells. It's a 6,500 crore market cap company, and it does nearly 1,500 crore plus of sales. And that kind of underlines to you that the asset-light strategy is what they use for this purpose. And therefore, can they continue to deliver on that strategy is the core question. It's dominant in India, but it's pivoting its international strategy. Are they doing that in a significant fashion? What's the impact of that going to be is what I'd also want to know. So a little bit about that. Now let me talk about products, and you'll get a decent sense of what they do therefore. Air coolers, which is the primary product. There are multiple models for different price points, and some of that, the fact that they've come in with new models has aided the numbers for FY25 as well. So air coolers, of course, is its core product offering. The other one is, of course, commercial cooling as well, large space cooling for factories. They also do tower fans, kitchen cooling fans. They also do water heaters, and they've launched a couple of new ones as well this year. And this is, of course, the upcoming segment that they have. So you might well see this as something of a renewed focus area and a larger mix coming through in terms of some of these new and alternate products that they're doing. Then there is spares and accessories, which is replacements for the current products that they have. So broadly, that's how Symphony shapes up, both in terms of business model and products. Now let's talk about all of the key metrics, and we'll start off with the income statement, of course, the balance sheet, thereafter cash flow, return ratios, shareholding patterns, street cred, street coverage, and valuations. We'll cap it off with those 8 metrics. And let me not delay this further. Let me talk about the income statement right off the bat. If you see the last around 3 to 4 years approaching FY24, you saw nearly no growth there. You saw some bit of margin expansion, but no material growth. So the entire 15% CAGR that you're seeing on a 3-year basis, pretty much all of it is back-ended, which is between FY24 and FY25. But nonetheless, it's still a 15% growth. That's what you essentially look at. And what you also therefore see is whether margins are expanding, and they have. FY22 was a good margin year, after which margins fell, and now they fully recovered. They were 15% in FY24 and currently sit at a very healthy 20%. So that's the broad way in which margins have moved. Net profit also has shown decent growth. FY22 to FY23 was a tough year of sorts. Thereafter, we've seen a renewed pickup in the profitability, which has gone from 122 crores in FY22 to 213 crore in FY25, with a real bump up that we've seen in FY24, post FY24, all the way through FY25. So that's where some positive momentum has been built up. I also want to try and highlight that the Q1 FY26 numbers weren't exactly the best, and that's understandable. We've still given this a thumbs up. In fact, there was 400 crore of sales in the Q1 FY25 quarter, and the sales in Q1 FY26 was just 250 crore. So we've seen a shrink with regard to sales. Margins as a result as well have come off sharply when you're looking at the Q1 numbers in particular. So you want to keep your eye out on that one. You want to see whether there is a recovery at play. Mind you, Q1 was a quarter where for the AC market in India, it was a tough quarter because monsoons came in early, if you remember. And weather-related factors have impacted sales in Q1 FY26. But could you start to see a reversal, or is it loss of sales? That's something that I'd want to somewhere take a feeler from the management as to whether they'll expect that revival regardless of GST. And of course, the GST will probably spur it further, because that will aid both margins and profitability to come in sharply higher if that were to come through. So something you want to keep your eye out on. Now let me take it to the balance sheet, and the balance sheet is an interesting one. Generally, when we look at the book value, it goes up. Here, you're seeing the book value go down, and that's because there's a 270 odd crore buyback which they've done cumulatively over the last couple of years since FY23. So since this point, they've done around 270 crore of buyback, and therefore what you're seeing is some amount being shaved off the book value, because you start to see reserves, etc. being adjusted for that. So broadly, that's how it's played out, and which is why you're seeing it go down. But otherwise, if you look at the borrowing, it's a very small number for a 6,500 crore company, and the book value is at around 760 crore odd for a 6,000 crore market cap company. That's broadly the take. Decent amount of cash also sitting in the books. So no concerns here per se. We've given this a thumbs up as well. Now you look at cash flow. And cash flow will give you a picture with regard to cash flow from operations to EBITDA, and that is quite decent. It's 80% plus. There is some receivables where amounts are locked, but outside of that, there's no concern per se, and therefore we've given cash flow also a very healthy thumbs up. There's been no problem whatsoever. Now the jump you saw in profitability in FY25 will reflect on the return ratios. Let's pull that one up. And that's what you'll see, that extremely sharp jump, and there you go, that's the ROC. But outside of that, if you look at the ROC numbers, it's been largely range bound, so decent kind of ROC shape that we've seen. Of course, FY25 is that year in which we've seen an anomaly, and FY26 we've seen in Q1 that pressure come through with regard to ROC as well, because of pressure on margins and profitability. So likely you'll see a shrink on this. How much, whether they can maintain 20% plus will really be the question. So, but we've given this a thumbs up, of course, given the stability of it and the possibility that you could well see it shrink is something that you want to keep your eye out on. Now let me talk about shareholding. You're looking at 73% promoter ownership here, which is more than decent. You've got FI is also owning a bit of it. DI is also owning around 9% and then you have public holding the rest. So broadly, it looks like a good structure in terms of shareholding pattern as well. No concerns here. In terms of trades and block and bulk deals, not too many insider trades either to talk about any material ones at least. So that's something that's not much of a concern. Now let me talk about some of the other metrics. Let's talk about street cred, and when you look at the 1 month performance, when you look at the 6 month performance, the 12-month performance, you've seen clear and constant pressure on the stock price. So that's how the stock has done in terms of performance. Clearly there's pressure, 40% down from the last year, and only a 12% return is what it's given over the last 5 years. So we've given street cred a thumbs down, given that this has been a stock which has performed preciously little over the last 5 years, and there's clearly been pressure on the counter. So that's how we've shaped up street cred. Now let's talk about valuations, and when we stack up the valuations, you're looking at Symphony at nearly 32 times. When you're looking at Voltas, Blue Star, all above 70 times. So that's something you want to think of. There's also Crompton and Whirlpool, because they are diversifying into that segment, and therefore Symphony stands out in terms of valuations in comparison to all of these. So there's a thumbs up there with regard to where valuations is concerned that Symphony commands. But of course, there's a larger tilt towards AC, and that's something you want to keep your eye out on. Street coverage, 7 buy, 1 hold, 1 sell. Firstly, the coverage is just 9, so we've tried to be a little more tempered here, but a 37% is the average upside. And therefore, ideally a thumbs up, but we've just been a little more cautious here and given this a neutral, thereby arriving, and let's stack it all up, at a rating of 6.5, very healthy, on our KYC rating, with a thumbs down on street cred. But outside of that, when you look at the metrics, well, it's a very solid set of metrics that we've tracked. Very, very few companies where we've seen this kind of set of numbers, all of them come together very, very well. So 6.5 on 8 on our KYC final rating for a Symphony, and broadly, that's how we sum it up. Now let's talk a little bit also before. Okay, so we have with us Nupesh Shah, who's the Managing Director, Corporate Affairs at Symphony, joining us. Great having you here, Mr. Shah. Good morning. This is Harsh here. Let me first start off by understanding what is your sense with regard to the elasticity of demand for the products you sell. You believe that this GST rate cut is going to really aid the numbers in a very solid fashion for you, and how much of additional growth are you already penciling in for the current year, if that is so?
Thanks for having me. First and foremost, let me clarify. As far as air coolers are concerned, there is no reduction in GST rate.
Right.
Earlier it was 18%, and it remains intact at 18%.
Right.
So all the cooling appliances now, whether fan, air cooler, and air conditioner, are in 18% category.
Correct.
So as far as GST is concerned, it's neutral for Symphony and air cooler industry as a whole. That's number one. Number two, however, that doesn't change anything in terms of the outlook, in terms of the growth potential. By the way, I was just listening to your very impressive commentary, but just to add some more flavor, in last 3 years, as far as Symphony domestic sales is concerned, it has registered CAGR annual growth of 23%. That is as far as the domestic household air coolers and other products put together. Again, having said that, as June 25 summer was not quite conducive for entire cooling industry, there has been a degrowth, but still June 25 summer quarter registered second highest June quarter sales in the history of the company. What I mean by it was better than earlier best of the base season. And the reason being, one, wide variety and range of product and air cooler category. Secondly, deep penetration, what we have done in last couple of years in semi-urban and rural, and especially alternate channels, including e-commerce, D2C, apart from large format stores. And in addition to that, in financial year 25, 21% of the top line and almost similar bottom line was contributed by non-household air cooler sale in domestic market. What I mean by 21% sale was contributed by products like large space ventilated air cooling, that is centralized air cooling, water heater, tabletop fan, kitchen fan, and exports from India. And by the way, in June 25 quarter, that was 30%. Few years before, this percentage was minuscule, and they are having huge, immense growth opportunity.
Understood. So, sir, let me clarify this. GST rates have been brought down across the board, which gives the people more spending power. Do you believe that is going to drive top line growth for you in a better fashion this year, in a year in which Q1 in any case was subdued? So give us that perspective, sir. That's where I'm coming from.
Sure. So one, on account of GST rate reduction, and secondly, earlier on account of income tax rationalization. I think the overall estimate is close to 2 trillion rupees will be saved by the customers or the end or the taxpayers. And good amount out of that has to come back to the consumption. And certainly that should be a huge boost for an industry like us. Not only that, as of now, or even as on 38 June, across consumer durable, whether you name it refrigerator, washing machine, air conditioner, air cooler, there has been huge inventory pile up at a trade level. In fact, this will also help to substantially uptick the festive sale. And on account of that, it should also substantially help to us as well as other companies.
Got it. Okay, so that should certainly aid the numbers. What are you penciling in, sir, in terms of FY26? What's the top line growth looking like for you?
As per our IR policy, we are not allowed to share any forward-looking statement. But considering normally summer sets the tone for the whole accounting year, and hence obviously current quarter and next quarter is likely to be subdued. But as I explained, non-household air coolers and exports from India to an extent has a potential and likely to make up to some extent that shortfall.
Understood. Sir, with regard to export, and we speak about this even from a perspective that FY25 was a bit of a turnaround year for you where exports is concerned, or where your foreign markets is concerned, if I can call it that. Do you expect that to sustain, and this real sharp expansion in margin that we saw in FY25? Of course, Q1 has already been a very soft quarter. So give us context on where should margins therefore lie for the full year.
Yeah. So first question related to exports.
Yes, please.
Certainly, I think a lot of work has been done by the company in last couple of years, and we are witnessing the result of that. And hence, we are very optimistic about the exports from India. And hence, in line with that strategy, focus on India and exports from India, we have decided to put on block our two overseas subsidiary companies, one based in Australia and second in Mexico. It doesn't mean we are necessarily exiting from those markets, but it makes a lot of sense to produce and export from India with the local team. So that's number one. Number two, as far as exports are concerned, vis-a-vis international players, mainly Chinese players, Symphony's products are far, far superior and still really value for the money. And we really give a run for money to the Chinese players in terms of the product, in terms of the price, and still commanding a decent margin. And as far as the margin for the year or down the line is concerned, certainly our contribution margin or gross profit margin will remain intact as we witnessed last year. However, when it comes to the EBITDA margin or PAT, it is also the function of the economies of scale and top